What's up, everyone? Richard here from Ola Prime, and welcome to our first morning session of the day. Nandan, how are you doing?
Doing all right, Richard. Hello,
Good,
everyone.
good, good. I see Igor
Everyone.
just joined. Hey, Igor, how are
Hello,
you?
everyone.
Hey, Igor.
How's
Hello,
things going
guys.
that side? Awesome. Did you have a good birthday yesterday?
Yes, it was incredible.
Awesome.
Yes.
Nice. All right. So, yeah, FOMC day. Don't know what you guys are anticipating during the morning session. I'm thinking that if there's any movement, well, in the markets that I'm watching, it might happen maybe one chance in the morning, and then around about midday, things might quiet down. So, or just quiet down for the rest of the day,
Yeah.
or until that FOMC meetings come out. So that's at 2 p.m. Federal funds rate. They're not expecting a decrease. Who knows? We might get surprised, right? And then the
Yeah.
FOMC statement,
Yes.
as well as Powell's FOMC press conference at 2:30. So potentially a very volatile session that lies ahead. Again, I'm not expecting too much to happen before that, but again, the markets won't follow what I'm saying. We just trade what we see, right? So yeah, you guys want to take us away, Igor or Nandan?
Yeah,
Show us
I
what you
can
got
start
there.
off.
Okay, Nandan.
All right. Oh, hold on 1 second. All right. Can you guys see my screen?
Not yet.
What about now?
There, it should come up now. There we go.
Yes, a bit full.
All right. Nice.
Perfect.
Yeah. So it's pretty much the same thing that Richard just said. Guys, I'm not going to be trading today in the main trading session. I think we're pretty much going to be quiet until the news comes out. It's a pretty big news announcement. It's not anything small. So you know we're approaching the end of the main session as well. So I think if any of the moves did happen, we had some pullbacks on gold that did happen, but nothing really massive. I think if I go into my spreadsheet here, um, the entire market is consolidating on the 4 hour. There's not one trend that is active right now. We got some trends
Mm.
on the daily charts, but overall it's largely mixed on all the daily time frames as well. Um, the weekly time frame on the US dollar is the only currency that's showing any type of consistency. So there is some weakness on the larger time frames, but with the news announcements today, I don't think the weekly time frames mean anything at all. That news announcement can quickly change things, and everything can break loose in
Mm.
an FOMC news release. And there are a couple pairs that I wanted to look over and potentially have in my mind when the news comes out. So the first thing was Bitcoin. Bitcoin pretty much tested the highs that it previously made. We made a double top almost, oh, pretty much just a double top, and I'm just waiting for a breakout of 97,787 and past there. If all the cryptos are going up, the entire crypto market is going up, I have no problem in buying Bitcoin and holding it to the all-time highs and potentially even higher. So, you know, you have to use other cryptos in uh, your decision-making process. So if I'm trying to buy Bitcoin, for me, I personally use Ethereum and XRP as sort of support. I want to see those two cryptos going up as well. So if Bitcoin, Ethereum, and XRP are all green, and I get a price breach, then I'm more interested in purchasing it and buying and going long on Bitcoin. So that's kind of the game plan with Bitcoin, and it's going to be the same game plan with all these guys. I'm looking for dollar weakness to come, or yeah, dollar weakness to come back into the market on the smaller time frames. So we still have some pretty good trends, and the first pair that I'm looking at is going to be the Aussie dollar. This pair, again, we've been looking at this for forever, and it's fresh cross on the weekly time frame. Daily time frames are going up, and we've been slightly just trickling to the upside. We had this massive consolidation block here, and we just very slowly trickling to the upside, and we're making higher highs and higher lows. But ultimately, I think after this news, if we don't have a 200 pip spike, then I'm more interested in trading this pair if it breaks 0.652, and then past there, I think we have a really strong chance of making our way to these all-time highs at 0.689, all the way up to here. So that's a pair I'm going to be watching. The next currency pair is going to be the dollar CAD for a sell. Again, this pair has also been trickling down, and we haven't really gotten a strong momentum trade on this guy. It's just been in a downward consolidation. So I think if it breaks this 4-hour zone, this entire uh, area of junk here, it's going to be
Next.
at 1.374, and past there, I think we got room to move all the way down to 1.348, 49 around that area. Um, it could move down past there, but I think that's going to be a pretty hardcore um, take profit level for me, at least. If I do get into that level, I'd be willing to exit my entire position, because past there, I'm not sure if this pair would continue down, but it absolutely could. New Zealand dollar is the next pair. We're in a very strong uptrend on the weekly time frames, the daily time frames. We've made a double top now, and I'm just waiting for a breakout of 0.603. It's currently about 50 pips away, so it's about a 1% move away. And I think that's the case with a lot of these dollar pairs. They're pretty far away. They have to make a very large movement to be able to break out. So how I would approach today is, when the news comes out, if there is a massive news spike, maybe 70, 80 pips, or higher, at that point you really have to scale back on your lot size, and
Mhm.
wait 15 minutes at minimum. Five, actually 10 to 15 minutes at minimum. Wait for the currency pair to spike, and then create some sort of consolidation on the 5-minute chart or the 15-minute chart. You never know what can um, how long things will consolidate. But once they break that little zone of consolidation, then you can sure as hell just enter in on it. But you have to enter in on it with a scale back position size, just in case they do start to pull back. And there are scenarios where I've seen where the news will come out and the currency pair will never consolidate for 5 or 15 minutes. It just continuously moves up, and it slowly moves up. So it's really weird. So in that case, if you get continuous movement, the news comes out 5 minutes in and it's still moving up, yeah, you got to scale back your lot size again, and then uh, have a wider stop and be able to move your stop to break even. But you know, I would caution against moving your stop to break even immediately, just because you can get caught in a pullback. So if you are scaled back and you do have a wider stop, that allows you to stay in a trade and accept more drawdown, because you're risking less.
Mhm.
So I wouldn't really suggest a full aggressive entry on it. And now the next scenario is, if the news does come out and there isn't a really massive spike, it's like 30, 40 pips on some of these high volatile pairs. That's a much better scenario. At that point, if the perfect
Yes.
case is a 30, 40 pip spike, and then it makes a 5-minute consolidation, for 15 minutes or something. It's just going sideways, and then it finally breaks that consolidation zone, and then it continues in the direction that it spiked in. That's the perfect scenario. And hopefully you have a large trend on your side, you know like these trends I've mentioned here. Hopefully you're able to get into one of these guys. But um, that's kind of my approach and my game plan for today. If nothing does happen, and the market has moved way too much, then I'm comfortable just sitting on my hands, because remember, you always have another chance to get into the trade as well, since we trade on the higher time frames. Um, the next thing I wanted to look at is gold. We pulled back yesterday, and we're currently consolidating in this 1-hour range. So honestly, I don't think this is a realistic entry, just because the news spike. But if the news does come out and we don't immediately break out and just absolutely skyrocket, I think a breakout point of 3399, um, or 3400, I'd say, is a nice even number, is better. I think a breakout point of 3400 on gold, a buy on there to the highs that it recently has made. I think that's a better plan. And then potentially, past the highs it recently made, it can potentially retest the all-time highs.
Mm.
This news driver is very powerful, so it can drive very strong movement. So I certainly think there are some pips to be made. And another approach you can take in this market is if you're uncomfortable holding a trade. Let's say the news spike comes out and the pair is constantly moving up. Well, you don't necessarily have to stay into that trade. You can be comfortable with taking a scalp for that, or just like a not a scalp, but more of an intraday type of trade. You can exit and take all your profits off the table after 30, 40 pips. That's definitely doable. So don't feel the need that you have to stay in a trade just because it's a trend trade. I mean, it's a trend trade, but you can always get back into it. So I think those are some things you should think about um, in regards to how you can approach news trading in general, and especially with this strong news announcement. But I think that's all I'm looking for today. I'm not really going to trade anything before this FOMC news driver, just because I think the volatility is just not going to be there. I could be wrong. We could get some unexpected news happening anytime soon, but the probability of that is very low, in my opinion. So I'm pretty much just out of the market, sitting on my hands, just waiting for that news to come out. But yeah, that's my approach for today.
Cool.
Smart.
Very smart.
Yeah.
Smart approach. So, guys, if you don't mind, I can a little bit share my screen.
Sure.
Yep.
So today, for me, fundamentally is a very, very interesting day, just because the Fed, and one of the things that I'm watching right now is the US dollar index. If we analyze the price movements, we can see that last 3 days in a row, we had a bearish US dollar. And today, of course, we're a little bit bearish, but right now we are break even, let me say, about US dollar. But one thing that bothers me is that these three bearish candles are actually nothing special, because we were above 100, and the levels that we are right now is just something that we oscillate last 7 days. And in that moments, for example, British pound dollar, for these values of US dollar index, the British pound dollar was around 1.33, 33.2 or something like that. So we can conclude that a lot of speculators and traders enter into euro dollar and British pound dollar, and this spike is some special gaming plan, just for some big banks. And I'm trying to answer that, to see the possible scenarios what we can expect. And one scenario that I have on my mind is this: if we see that Fed just feel the pressure, because all politicians push the Fed to decrease interest rate. In that case, British pound dollar and euro dollar will go to the sky. And this is something that I'm thinking about that. So there is a probability, there is a small chance that that can happen. So of course, everything is there always some kinds of uncertainty in everything that we talk about markets, of course. But I just hypothetically try to see that if we get unexpected interest rate cut for the US dollar, euro dollar and British pound dollar can push really, really high. And the good thing is that British pound dollar is already, around 60 pips from the yearly high, which means that we can get the new yearly high just today if that happens. And that push can be very interesting for traders and can move the market in really completely different direction that we had last couple weeks. And this is something that I'm just a little bit thinking of. And right now, what I'm watching is, of course, British pound dollar. And the British pound dollar is somehow, I can say, in a bullish bias, of course, bullish bias. And my bullish bearish invalidation point is, I will just show on the chart right now, just to see. It will be this horizontal line. It is 332. It's around something like this. Okay, like this. So today we almost touched this bullish bearish invalidation point, and this is if we go and draw Fibonacci retracement, we can see that the low for the last 2 days was around 1.3260. Just to see, yes, 3260, of course. And the high was 1.34, which means that that our bullish bearish invalidation point is just a little bit about 61% Fibonacci retracement. And the price was oscillate between 0.5 and 0.38 a lot of today. And right now, I just wanted, maybe because I think because of the setups that we have time for that, I can share just a little bit a strategy how I usually analyze this opening range and avoid the choppiness of the market when I'm trading. So I will just show on my screen something interesting. I will share my Excel. It will be, I think it can be interesting for someone, because a lot of times I show my indicators, but I never go into the deep what we can use from that in practically in trading. So I hope that you will see my screen soon. Do you see?
Not yet.
I can share again. Maybe I lost it. Now?
It should come up now. It keeps going away. Just try again once more, Igor.
No problem. I know it's a Excel. It's application. So I will try again.
Yeah, it pops up on my side in the back end and then it just goes away again.
Okay, so I can maybe share the whole screen. Maybe in that case you will see that. I will share my screen. Maybe it's a better whole entire screen like this. And now, can you see my Excel now?
There we go.
Excellent. So what I will do right now, I will switch very often just to see first to see the low and high from today. So the high was 1.34, if I didn't forget, I think, yes. And the low was 326. So I will back to my Excel and I will put my 1.334. Actually, it was 3402 to be precisely. The low was 1.326. And the very interesting thing was the close. I will just find what was the close for the day. And I think that it was, okay, the problem is that, just to check what was, yes, it was around 333, I think, 1.333. So now we can calculate these prices just for the traders to see. So B2 plus dollar A2 plus dollar B2 plus dollar C2, just to calculate this. Oh, now people can see that I don't know to work in Excel very well, which is not true. Okay, this is it. Okay, this is the just divided with 3. Yes. So the catch is that the pivot point is 1.333. So the pivot point is almost as the close. Now what I do, I am calculating the low and high only, just to show that little little trick. Okay. Now here we have without the close and divide with 2. So this is the almost the same. Just to see right now, did I push everything as right? Something is not here well. Just to see A plus B. Yes, this is it. And for the C, it's a close like here. Just to see my. The problem is that we need to use the UK time, for the close of the day. And if you don't do that, we will have problem with a calculation. So this is the biggest problem to find, which was the right now is a 16, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So just to check that. Okay, I need to take the 1 hour chart. Yes. Yes, I think that the low was different here. The close price was at 1 point. Sorry guys because of this, but I think it was around 335. So this was the mistake that I made. So the close was the 5. If we watch the UK close, now we have little bit change here. Little bit, not much. So what I do here, I just find a difference between these two pivot points, and then I add that value in pips above the pivot point and below the pivot point, and then I create the area. So if we calculate this, it's around 8 pips above and below the pivot point. And in that case, I can go back and just find with horizontal line, I can draw that things. I will do that very soon. So it was somewhere here. This is the buffer, and somewhere here like this. It's almost the same as a but like this. Okay, no problem. So this is the pivot point area. And the problem is when we, during the UK Open or Euro Open, go in this area. Because if we see that, usually that day and the whole session can be very choppy, like we can see right now. Today in this area, we got a lot of time in this area here. And this was the really big problem for me, and I think for a lot of traders today, because a lot of traders can lose money when you have such a choppy price and movements that are, in some area, you just think, okay, it will go above or below and nothing's happened. So what they had today for British pound dollar, just to watch in some micro way, is that we had a push just above 1.336, and it was in the moment before the UK Open. And then after that, the price during the UK Open just went into the pivot point area, and whole pivot point time, it's I think 90 minutes, I think, we were in that area, in pivot point area, the whole UK time and 1 hour after that. And then we just started to go up, but we're nowhere. If you realize there's no push to 1.34, there's no push to 1.3332. So we are really nowhere. And the same thing we can see for the euro dollar. So this is so boring that movements are so false. You watch on the chart, you find some patterns that you want to see, but all these patterns are completely useless right now because we don't have the clear bias. Even that we can say, okay, as British pound dollar and euro dollar is bullish, and I can say that my bullish bearish invalidation point for euro dollar right now is 1 point. Let me just show that 1 point. It is somewhere here. Yes, this is my bullish bearish invalidation point around 1.133, and I hope that if we can go above this level, I'm bullish for euro dollar. But like I say, nothing. This is the really so choppy price, and the very strange thing is that we have a choppy price and during the euro session and during the US session, and we are just waiting to see the US market news. And this is the way, this is the, like Nandan said, do not trade. So today is perfect day to avoid trading. I tried some trade to make during the UK session, and it was really foolish, really foolish. And I'm just sad because I even tried that, because it's a really choppy market. And when I see this, how we oscillate in the pivot point area and have some false little breakouts and then sideways market push, it's really stupid for trade. And
Yeah, it's
for
very
all,
tough.
yes, and for all other pairs right now, if we watch, for example, for US dollar, Japanese yen, too, we are in the middle of the bearish channel, for example. Nothing special, nothing to see, nothing really. I don't know what to say. But the one thing that I see, that if the market expect something to happen right now, I think that there is a little bit hope that we can see interest rate decrease, even if we see the news, no, flat, nothing will happen. Why? First, I see just right now during the market open, we're a little bit bullish for the stock market. We can see that euro dollar and British pound are a little bit bullish too. So I think that there is that some traders and some institutional traders, there is some statistical chance that we can see maybe US dollar interest cut, and then I think that push, that the major bias, even the price is choppy, is a little bit bullish. So I just try to clarify and to see what is the most what we can expect. So I really I know my friend, when I start to describe something, and I'm trying to find the edge and bias and everything, and I am nowhere, for example. And then my friend asked me, if I put your gun in your hand, please tell me, will be bullish or bearish. So, and when I get that question right now, for example, if I need to choose, I'm choosing to be bullish for British pound dollar and euro dollar. I believe that there is a slight chance that we see the interest rate cut, and that really can move the market. So if I need to choose the best trade for today, I didn't succeed in that, but if I need to choose, I would choose this moment when we reach almost the bullish bearish invalidation point, somewhere here, for example, at 1.333. Maybe that buy order then with a stop loss like here, and to wait to see what market can bring. Even that we have a slippage can be 15 pips, 20 pips at most. that kind of the trade with, you'll hit the stop loss and be break even in this case. But it's very dangerous to trade just before the news, because even that we have the news in our favor, usually we can see, slippage of 10, 15 pips, just nowhere. We see that slippage, and then we see the bullish push or the bearish push in the opposite way. So this is the something why beginner traders should avoid to trade the news and before the news, because if you want to trade during the news and you already have some trade few hours before the news, you need to have really, more than 25, 30 pips in profit, so you can put the break even. So if slippage happens, you will be positive some way, or you will be break even some way. But if you enter into the trade, put the stop loss, and you think that stop loss will react during the news, you don't know that. Sometimes you can lose 20, 30 pips just in slippage very, very fast. So this is the something that I'm watching, and this is the something that I want to see. And like I said, the S&P 500, we can see in the opening range right now, and the whole day we're pushing a little bit higher. The Bitcoin, the same thing. We are pushing a little bit higher. We are 0.3% in profit today, which I previously talked about that the Bitcoin market and the S&P 500 market is correlated a lot. So I see that market expect something positive to happen for the stock market, and maybe something bad to happen for the US dollar, just because of this initial move of this today. So today, whole day, we are choppy sideways, but there is a little push higher for the stock market and the US dollar and the British pound dollar and euro dollar, and we need to notice that, and just to be ready if something interesting happened there. So this is the something that I'm watching. And right now for euro dollar and British pound dollar, we're on the opening range. We're in the just on the opening price, based on the trading view, for example, which means that we are neither bullish neither bearish. Just we are sitting there and wait. So really boring day for trading.
Exactly the expectations I've got. Right, should I share my screens quickly?
Yes, please.
We should come up. There we go. So this is the NASDAQ yesterday. If you guys remember, took that trade right here at that little swing point here. That after price broke below this previous area, which was a higher low that formed on the 1st of this month. So nice swing to the upside. It was a nice little trade yesterday, and then price moved a little bit lower. This after, obviously, our trading session, probably around about midday, giving us a zigzag ABC to the bottom. And then apparently this spike to the upside was caused by some news about the tariff talks between the US and China. So left a bit of a gap there, at least here on the 5 minutes. So during the overnight session, or actually into yesterday around about 6 p.m., price started gravitating lower. And we're seeing a similar thing here on the ES, but I'll show you that in just a while. So price is heading towards filling that gap, very close to it. Again, I don't really know if I want to be trading the indices. Potentially crude, well, I'll show you now that there might be a potential setup that's occurring as we speak. But yeah, it is very choppy, guys. If you just scrunch out here from the beginning of this month already, if you look at things, it's just sideways pretty much, right? A range. The same thing's happening on the ES. So, ideally it'd be nice to either clear this high here at 21.77 this week, today, tomorrow, or to the downside, get out of this range to the downside, and at least, give us some sort of expectation for, of direction where price might take for the remaining of the week, maybe leading into next week. Before I look at crude, let's quickly look at the S&P 500. Same thing. We had that spike upwards, again, occurring around about the 1705 mark, just before that 1 hour of maintenance period that occurs in the futures market. Also spike higher, and you can see that the SPX hasn't closed that gap yet, so it's pretty far from actually closing it, where the NASDAQ is actually much closer closing it. So again, I don't really think I should be touching the indices today. Again, I think if there's any sort of substantial moves in either one of these indices, it will probably happen within the first half an hour of market open, and then probably fizzle out and move sideways until those FMC numbers come out, or the speeches and stuff that they give. So that brings me to just quickly the higher time frame chart here on the SPX. Remember last week we were talking about price being stuck in this fair value gap. It was also an area of previous support. Turned a little bit of resistance. We broke above that area. And if you look very closely, for 1, 2, 3, and today being the fourth day, we're still stuck within the body of that candle. If we do see a move lower, potentially a spike, maybe, something caused by this news event, we could potentially see a retest of that area, right? And then if we don't start seeing bullish action out of there, I think the trend will continue to the upside. Alternatively, price can obviously just halt here and we see one heck of a spike to the upside. Alternatively, I think if we get a strong move below that area, which was support, resistance, and now potentially support again, that we might actually see a deeper decline during the coming days, maybe weeks. All right, so that's my view on the S&P 500. And here we're sitting with crude oil. We have this high low of yesterday, as well as a little higher high on the day before, right? Giving us a little zone. Price just pipped that. You can see that here on the 5-minute time frame. Again, we're within my trading window. Before I start zooming into price here, we were looking at this area to potentially be broken. That was yesterday. The price fell short of it, and it fell short of it slightly after our trading session yesterday, but resumed back to the upside. That high being this cluster of or swing point, and actually a lower high that formed around the end of April, right? So that's just been pipped, and we've seen a strong move lower during the overnight session. This, however, in my opinion, might just be a corrective structure. Probably the most common one, an ABC. Break of a previous area that was resistance, turned to support, and now potentially going to see a move to the upside. Okay, we got to be mindful that if you do trade crude oil, that we have the inventory report at 10:30. So that is in just over half an hour. But if I just switch to a 1-minute time frame here, you'll see that again, and hopefully you guys watched this yesterday. Obviously, you guys have, when I took that trade in the NASDAQ. I do switch to the 1-minute time frame as my trade execution, but not just that. I want to see clear price structure break. You can see that this has just been one continuous move to the downside, right? Now price moved up, and it's a bit far away from this actual swing low. And if I do see now, and since price has broken this previous structure point, this is probably just another indication that we might see a reversal to the upside, or at least an early indication that that might occur. So where is, or did there, was there a fair value gap that formed prior to price breaking that point? And the answer is yes, we have actually had one down here, but in this case, price already tested that around about here and moved back up. We have a very small one over here, which price has just entered. Oops. Come on. Just bear with me, guys. Right there. Very small. Actually, a little bit too small for my liking. So those are the ones that stand out. I would like to, like I said, ideally trade the one that's closest to the actual potential swing point, because obviously it's too early to tell for sure. But I'll be willing to, if we can get a retest of this lower zone, to enter there. It might be a little bit aggressive doing it on the upside over here, where price is currently. Right, so we might actually get that. So let me just get rid of these, otherwise it's going to stand in my way of entering an order. But sorry, guys. Let's go put a buy limit order there. And I hope price actually reaches that. FOMC today, I'm not sure if it will really sort of influence crude oil that much. It might do. Who knows? Certainly the crude oil inventories definitely can. Right, so I want to be a bit more conservative, not going to be as aggressive as yesterday, although we did get, I did get into that swing, close to that swing low, as close as possible. That's what I want to say. So we can get another little small decline. Price currently at 58.62. I've got a buy limit order at about 58.52. Then I'll be able to go long there. So that's the setup. Very similar to what happened yesterday on the NQ. Price breaks the zone. We get a breaker price structure on the 1 minute time frame. It's quite visible on the 1 minute time frame, and a fair value gap that formed. In this case, it's been tested before, but it is low far enough down that this will be sort of like a value area for me to try to get long, rather than trying to chase the price where it is currently. So we're currently seeing a move lower. So let's see what happens. We can get another trade here. Remember yesterday I took that first trade in crude oil, which didn't work out. But then that beautiful setup that we had in the NASDAQ. So hopefully the trading gods are with me today again.
Yes.
All right. So yeah, we could probably leave the screen on here unless you've guys got anything else to chat about. Let's see if I can get filled in this order. Price is moving towards that area. And see how it goes.
Yeah, I don't really have anything to show. But yeah, one thing I wanted to actually mention to some of the folks out there listening is you can certainly trade before these major news events, maybe not an hour before, but you can certainly get into trades before the news events. The only thing you have to make sure, especially if it's a trend trade or actually it doesn't matter what type of trade, you have to get your stop to break even and make sure your stop is to break even before that news comes out. And one thing Igor said is even though your stop is at break even, you could experience slippage. So make sure you're also far away from the market. You have to be in profit
Yeah.
and you have to be far away from the market, because if you're only 30 pips away from the market and there's a massive, red news driver or a high volatile news driver coming out, chances are you should probably take your profit and walk away for the day. It can go in your favor, but the likelihood of you being spiked out before it goes in your favor is extremely high.
Yeah.
That news spike is very aggressive. It goes up and down, so it's not just one directional. And it can be one directional, but a lot of the times you can see the news drivers, the news it just bounces up and down very aggressively, and sometimes hundreds of pips. So
Yeah.
yeah, you just got to really make sure. I've been in trend trades for a very long period of time, and I luckily had my stop to break even, and trades certainly just reversed all the way down and knocked me out of the trade, and I was up
Yeah.
like 200 pips on a single trade. So just keep that in mind. There have been other scenarios where I've held a trade and my stop was at break even and it just went in my favor, and that's more pips for you. So you can certainly hold your trades through high volatile news events. Just make sure you're far away from the market, and if you're more than 60 pips away, I think that's, it's okay. I think certainly I would leave my stop to break even and just let it go. But you can always take some profit off the table. If you're scared that your trade is going to reverse completely, you can always take some partial profit and then leave the rest to ride. So even if there is slippage, you'll probably be covered by that. But if there is no slippage and it moves into your favor, that's also it's a win-win scenario at that point. You've pretty much
Yeah, and
managed your
that
risk.
slippage can
Yeah.
be quite aggressive. Sorry, Nandan, for
Yeah,
interrupting
yeah, no,
there.
it's all
I
good.
mean, and what
Yeah.
type of orders you use? I believe a lot of beginner traders, especially if this hasn't happened to them before, if you use a stop loss, that order doesn't guarantee that you're going to get out at that level where your stop loss is lying. If you're sitting
Yeah.
with a one hectic reversal, or sorry, against you, or even if you get entering into a market with a buy stop or sell stop, depending what direction you want to trade, it becomes a market order once price moves through that level. And if the market moves excessively fast, you could potentially sit with a way worse entry level than you wanted.
Yeah.
Or if you're already in a trade and you get stopped out, that slippage could, balloon your loss way more than you anticipate in the beginning. So very important that you understand the type of orders as well that
Yeah.
you with, and
Right.
and the limitations and pros and cons that go with it.
Right, right. Yeah, some brokers offer a guaranteed stop, and I think, that comes with a premium, but uh understand
Yeah,
understand
there's
what
the fine print.
yeah, right. Understand what kind of stops your broker offers, prop firms, I don't think props really offer guaranteed stops like that, but
No.
uh yeah, just keep that in mind for niche trading. But certainly, I have taken trades before a major news announcement. It's actually worked out quite well. Just you need to be able to adapt your strategy, and for every single news announcement, I don't care what red volatile news announcement there is, at least 1 hour before. Even potentially even longer, but minimum time is 1 hour before the news comes out. You have to sit on your hands. You cannot trade. You can manage your positions, but just do not enter into a new position because the likelihood of you getting into strong profit is quite low unless you're in there for a quick scalp. But even then, I'd caution
Yeah,
against
well,
that.
you're right about direction, but initially the market reacts against you.
Yeah,
That's very frustrating when that happens. You get stopped out, and then you try again, and you're stopped out, and then 15 minutes or so afterwards, the market moves in your original direction. That's very
yeah,
frustrating. And by then, you're already sitting with a loss.
yeah. I mean,
That
I've been there
happens.
and
That
I've done
can
that.
happen. Yeah.
So I'm speaking from experience. It's really painful to just watch all that money vanish in a second.
Oh, yeah,
So
for
yeah, don't
sure.
do that. I'd rather you go to a casino rather than just sit here gambling for news. That's you know, protect your capital at all costs.
Yeah. Avoid the temptation, because that is like going to a casino
Yeah,
or
yeah,
placing your bets on horses or whatever the case might be. You are
right,
gambling on a potential outcome,
right, yeah,
not a statistical outcome. You know what I mean?
right,
A
right.
potential statistical
Potentially,
outcome.
yes.
But yeah, guys, prices fell short of my entry order. They might still actually get into that fair value gap, but it's sort of been quiet ever since I placed the order. So I don't know. Nandan, do you have anything else to talk about while we wait here?
Yeah. Supplemental trades. Before going into every session and before any news announcement, major news announcement, I like to see what the market is kind of offering. Today obviously we went over all the pretty much every currency is going sideways, and the U.S. dollar has some weakness on the larger time frames, but it's largely useless. It doesn't really mean much until that news comes out. And
Hmm.
what I like to do in these scenarios is when I'm planning for news, or sorry, when I'm looking for charts before the news or before the session, what can happen is none of those trading plans might work out, but another currency, another chart, another pair might break out. That's what I call a supplemental trade. A supplemental trade is a trend. It's a trade that I did not think of beforehand. It was not in my trading plan, and sometimes pairs could move against the major trend for a few days, or sometimes, pair might not be trending at all, but then it breaks out of a range unexpectedly. So
Yeah.
those are they're very common. They happen on a multiple daily, almost not almost daily, but they happen weekly. They definitely are common. You can have a trading plan set in place, but they won't follow through, and then another pair breaks out. So don't just get tunnel visioned. If I
Mm,
know this news is for the US dollar pairs, but don't just get
mm,
focused on the on the USD. There could be other currencies that start to
yeah.
move, and that's where that strength versus weakness bias comes into place, and that's where I like to use the MetaTrader profiles, where I have, for every single currency I trade, I have all the charts on one screen. So 7 charts for the Canadian dollar pairs, 7 charts for the US dollar pairs, 7 charts for the euro pairs, etc. But I like to see which currency pair is driving the movement. If I get a price alert breach on the US dollar pairs, I'm going to be looking at the cross currency to see, is that the currency that's driving the movement, or is it the US dollar pairs that are driving the movement? And the
You're
way you
right.
do that is you line up
Mm,
all the charts, you go look at the smaller time frames like the M5, M15, or even M30, and see which currency. Every single chart should look the same pretty much. That's what I've known um, to be true, is when you have meaningful movements, um, every single chart in that currency group will look the exact same. So if the US dollar is moving up and it makes a, I don't know, 2% move that day, a massive move on the Euro USD, well, look at all the other USD pairs. They're probably going to look the exact same on the intraday
yeah.
time frame.
Yes.
So um, yeah, that's definitely a very powerful way to look at the market. It helps you avoid whipsaws, because once you have some sort of consistency going on, that's when you put the odds in your favor. And I like to put the odds in my favor before getting
Yeah,
into a
and
trade.
I guess you obviously that's like you do your pre-market prep every single day, and
Yeah,
not very much, potentially not so often if it's a very high time frame. But it
yeah.
doesn't necessarily mean that you're glued to your screens either. It's go set alerts. You know, you've done your homework, and wait for those alerts to go off. At least that's what I like doing.
Yeah, yeah, yeah,
Because it's very
yeah.
easy getting sucked into price action as well to make those mistakes. Like, oh, my price hasn't now reached my fair value gap area. Now we're getting a nice strong move to the upside. Should I jump in here? No, I'm going to wait for that area to be hit. We missed it by literally three pips. Um, you
Yeah,
know, that sort of thing. If I miss it, I miss it. But yeah, that's obviously on a smaller time frame. But I do also, do analysis. I like using market geometry that I've showed you guys before to,
right.
identify like our, angular resistance or support levels. And you can attach, even these days, back in the days, I remember we couldn't do this. You can now attach, especially with TradingView, alerts to like angular lines as well, or even like to pitchforks or whatever the case might be.
Hmm.
And do your homework. At least you're prepped. It's like I always say, it's like a pre-flight plan before you actually, approach your day or your week.
Yeah,
If those
yeah,
pilots go through an actual whole book of systems and setups and all that sort of stuff that they need to follow before they actually lift off, and then you know at least you've done more than most people would have done if you prepped,
yeah. That's very
and
true. A lot of people don't have a
yeah, they
plan or
just
trading
like
plan going in.
on a whim try to get into a trade, and
Yeah,
what's even worse is if things go their direction and it actually works out, because then it like creates bad habits,
yeah.
and at some stage the market's going to teach you a lesson. That's for sure.
Right. Yeah, you're gonna pay the price.
Yeah.
Yeah.
Anyway, that's my 2 cents worth. Let's see what's happening here. No, the markets are going to run, or the crude oil is going to run sideways, and nothing's going to happen. Murphy's law. Just got to keep an eye on this crude oil inventory coming out in 12 minutes. No, 22 minutes. So yeah, it's a difficult one. Don't like entering that close to crude oil reports, but let's see. if we don't hit this fair value gap and I get full within the next, I would say 10 minutes max, then I'm just going to cancel that order.
We will see
So
what
still,
will
what,
happen
22 minutes
there.
away from the half an hour area.
Yeah.
Maybe price is just running sideways in anticipation of those numbers. Who knows? Okay, I'll keep an eye on things here.
Tell me, Richard, again.
On your side, some
I just
wisdom.
want just to check about this trade that you have one more time. I just interesting. How did you calculate the stop loss for this trade when you enter this trade? Are there any rule or something for the stop loss?
Well, there's two different ways you can do it. Since this fair value gap is actually very close to this swing that we've seen right now. Now, whether that's going to be an actual swing for the day, I mean, I think yesterday's example was a really good example where fair value gap formed right close to an actual price structure break and to the actual low that turned out to be the low for at least, a few hours. But you'll see on this chart here, the fair value gap is a 3 candlestick formation, right? So we got this red candle over here, which was sort of like a hammer. This long-bodied one that created the actual fair value gap, and this third candle. So with a bullish fair value gap, there was a gap between the high of the first candle in the formation and the low, and you use the wicks on this, not the bodies, the low of the third candle created by this long-ranging candle over here. So there's two ways you can do it. You try to put your stop loss just below that low where the swing occurred from. But sometimes you get a fair value gap like this one up here. That small one I showed you up here.
Yes.
If that occurs and you want to be aggressive about things and you want to enter there, but that fair value gap is not very wide. I prefer to have a nice little zone, at least with a bit of a buffer. Then you could have gone, instead of placing your stop loss all the way down here, you could have put your stop loss beneath the first candle of that formation that forms part of the fair value gap, which would have been here. But we have a little swing here, so you probably just could have hit it over here instead of this actual low here. But again, as I mentioned, it's a little bit far away. This price structure break also quite far away from that actual swing. So, it's all about your own decision making. How much risk am I going to take? Obviously, you can control your lot sizes and that sort of thing. So you could have tried to get in here, still put your stop down here below the swing point and just reduce your lot size, which is perfectly fine to do as well. But to answer your question, you either place it below the first candle or above the first candle, depending if it's a bullish or bearish fair value gap that forms part of that formation of that created the fair value gap, or below the closest swing low or high.
Yes.
This case is actually part of that swing. I mean, we could probably look here at yesterday's NASDAQ trade. Let's go back to that 1 minute time frame. I mean, that was just a picture perfect move, right?
Yes.
And this was also actually the swing low that penetrated that zone. Long-ranging second candle, first candle, second candle, third candle, gap between the high of the first candle and the low of the wick of the third candle, and test. And remember, my stop was down here yesterday. If this was higher up, I mean, there's many fair value gaps. There's another one over here that really didn't get tested. If you were aggressive and you waited for price to pull into that area, then if you wanted to be a bit more aggressive, place your stop below the first candle. In this case, in a bullish example.
Yes. And one thing that I really like when I trade is when I'm in the zone for support, resistance, and price oscillates, and in one moment, on 1 minute chart, I see 1 minute long candle, either bullish, either bearish. And this is the feeling when I know that something is starting now. So, and usually we have some push or something in that moment, and that's really, 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 really nice. So, and this your trade is very, very good. And I can share a little bit and talk about
Please do.
uh, futures market and CFD market right now, which
Yeah.
is a little bit strange, but just to share with you what I'm thinking about that. I hope that you will see soon my screen. Do you
There
see?
we go.
Yes, excellent. So I put on the futures market. This is the futures British pound dollar. I put one indicator that shows breakout and retest, and I really like to use it when the market when I have a good bias. So I'm sure that my bias is good, but market is choppy, and sometimes I like to use this indicator maybe to create few scalping trades, and I will talk a little bit more about that. But just want to show you this. So on the right side of the screen, you can see that British pound dollar price right now in the CFD market 1.3359. And right now on my screen for the futures market, you can see 6 pips above that price. So this is the something that I like to see, because usually this is the something that we can see when we expect some huge news. Because usually the futures market and the CFD market, the prices are the same. But right now we have really, really huge difference. And this is the proof that the people who are doing arbitrage, and which the main goal is to make money, and in the same time to align all prices in all markets, they do not want to work, so they do not work a lot, because they're just caution and just to wait for the news. They don't want to play with this. And this is the way when you can see the difference in the price. And very often the slippage can be completely different in the forex market and the futures market. I can see the slippage 20 pips, and here would be the 10 pips. Or I can see that the high price during the news is 20 pips above the in the first minute, and when I watch the futures market, I can see it to be 10 or 5 or a completely different number. So this is the proof that this is the separate markets, and that we can monitor that and use that. And now look, this what's happened. Just during I'm talking, the price didn't change for British pound dollar on the futures market. And on the look, this is the CFD market. So so that people who are doing arbitrage working right now, they hear me right now during this session and decide to work. But I just want to say that that people that doing arbitrage and trading, they're really, really important for the market, because they will align the price in all kind of markets. Either you trade a futures, either you trade a forex, or you trade on some other markets. This is it. The price for forex pairs will be the same. So I think that it's important for brokerage too, because if there's no arbitrage traders, a lot of brokerage companies will lose money just because of that. And because if the price is different in the two brokerage accounts, someone can use that and exploit that. So this is the interesting part about that. And now I will back just to talk about this indicator and how I use usually for trading. So just now when we have a time, I put one indicator below. It's an indicator that just calculate buy and sell, just to visualize buy and sell volume here. This is the oscillator just below this chart. And on the chart, we have a special indicator that's called a breakout and retest. It's a free indicator you can use on the trading view. And how I use it and how we can use that. So based on the algorithm, we the script, the indicator calculates the pivot low. And when they calculate the pivot low on the chart, they try to find any swing high that we can see in the past, usually the previous past in few hours in the past or something like that. And when algorithm check and conclude that the high price is above the swing high price, it's confirming a breakout of the swing high, and then create the retest based on ATR based tolerance zone. And after that, the algorithm try to compare buying and selling volume. And if there are more buying than selling volume on the retest, they just make a green rectangle and explain it's a bullish confirmation. And in that moment, we can assume that there is a higher probability that that trade start to go in the bullish mode. And the similar thing is in for the sell. So what we are doing, we calculate on retest, we check bearish confirmation. We see are the volume more selling, there more buying volume, and then we get some reddish boxes for selling. And this is the way how this indicator works. So so buy trade when we have a break above resistance, when we have a bullish volume ratio on the retest, and sell when we have a break below support, swing low, and bearish volume ratio on retest. And this is the way how this algorithm works right now. So if we check right now on the screen, I took a 1 hour chart. You can see, for example, that in the beginning of the month, on the 1st and the 2nd May, it was the last week, we got a really good bearish moves just because based on this strategy. Of course, we can use this strategy on the 50-minute chart. And for example, today we had a really bullish push. Actually, it was the bullish push from the yesterday, because yesterday was May 6th. And if you remember yesterday, we got price below 1.33 level, and in one moment price started to go up, and we got a lot of zones when we struggled to see if it would be bullish or bearish. And when this indicator, when check that we have a buying pressure on the retest zone and starting to go above that zone, it will just draw a buy rectangle here. So yesterday, believe or not, we had 2 chances to enter into the trade at 1 and the 2nd retest zone, one and around 1.33 and another at 1.331. And it was a really good trade. And what I like here is that you have a price level, and you break that price level because the trend is bullish, and then you back to retest that level, and in that moment you see that the volume pressure on buying side is bigger than on the selling side, and that is a perfect trade. So this kind of strategy can be so powerful if you guess the right bullish bearish invalidation point. So right now, my bullish bearish invalidation point for British pound dollar is 1.332. Imagine that this indicator shows either the bullish or bearish bias for that price range. I can be sure maybe 60, 70, 80% of the time that kind of the trend will go in the direction that I like, because in that moment when you have a bigger buyer pressure than selling or vice versa, that trade has a very good ability to be very profitable in that moment. So I think that this indicator is very interesting. Of course, you can use this on the large time frames like a daily chart. So I took example of the February 28th, when this when we just started to go up. We broke. I cannot draw here, but in the end of the January, we broke the relative strength index on the daily chart, and we started to go bullish, 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 bullish. And in one moment, it was in the end of the month, we started to retest the previous resistance, now support. And imagine you have a bullish bias, you broke a daily relative strength index trend line, you retest the trend line, and in that moment you start to go bullish. And look, after that, this indicator do not repaint, which is very good. So when you achieve that level and retest that level, it will show this buy order, and then you can really go upside and use this way of trading. Sometimes if you don't see, sometimes because sometimes traders do not see important price levels for all assets. But when you have visually, when you got this kind of idea, like this, for example, we broke the resistance, we test resistance, now support, and then we start to go up. And we have several triggers on our side and everything. So it's a bullish trend. It's beautiful. So that kind of trades really can pass more than 80% of the time, because all triggers are on your side. So I would just because we have time to show this indicator on maybe other assets, just to see how that looks like. So you see the similar thing on the daily chart that we had at last Friday. So we retest the big resistance, now support, and after that the start price going up, and right now we're in that bullish mode. So it's really beneficial indicator. Just it's a simple indicator, but it's a good that you can visually get a clue and enjoying that in that trading. Actually, just today, for example, we retest the zone. It was just in the early morning, and after that, the price started going up. However, we don't have momentum on the euro dollar, so it's not interesting. And for the last, what I want to see right now is, because I have still my trade in the Swiss futures, I just want to see, are there any clue here about using this strategy. However, there's no trade on the 1 hour chart. Just to check on the daily. Yes, on the daily we had on the end of the March. Look, which is how is beautiful this. Really beautiful. So I think that the best results we can get when this trigger happens around bullish bearish invalidation point, somewhere that will be a bullish already without this indicator. And then when you got additional trigger in your mind, you will become much better, and everything will change. So this is the really good stuff.
Awesome.
So
Nice.
Guys, by the way,
know,
I've canceled that order. Sorry, Nandan.
Okay. Yes.
No,
Yes,
I wasn't
yes,
gonna say anything.
please. Just
So I just marked a few things out here. We could probably watch this as that news comes out. Maybe something happens, maybe it doesn't. All those numbers. Again, this being on crude oil. Setup, break of price structure, fair value gap, price running sideways before the report. We should be coming out in just a second, and hopefully good indication of why not to trade some of these news events, or an example. But I canceled that order. From what you probably remember, I had it just here on the top of that fair value gap around 58.52. Stop was around 58.36. So according to my Forex factory calendar, it's not been released yet, although time-wise it's already 10:30 a.m. There we go. We're getting decline. Minus 2 million.
Yes, crude oil inventories, yes.
Yeah. So what's price going to do? It's in that fair value gap now. And that's just probably a good example of why I don't trade
Nice.
this.
Nice choice.
Yeah.
This is
Yeah.
really, really nice when you protect your assets.
So, exactly. So, this could very well still move higher now again, flushing out all of these guys on the downside, and then make a move back up again. And maybe then I'll be interested. Again, we're looking at a 1 minute time frame here. You can see that volatility that just entered crude oil. I just want to see what was that low here. $58.37. 58.37, so a bit of a double bottom type of vibe here. Candles still obviously underway. Let's get rid of this. So now if I do see a move back up again that breaks the 58.68 area, it could again be a break of structure type of trade. This fair value gap's now been invalidated. Will I then get another one if that occurs? Alternatively, price just keeps going lower. So according to the numbers, they were forecasting minus 1.7 million, which in fact it was minus 2 million. What the hell's going on now? Something's going on here, guys. Jeepers. Okay. Can you see the chart there? Could you see it the whole time?
Could see it now.
I had like at least 12 new windows opening for some reason. A bit of a glitch. So that might be a little bit bullish for crude oil, actually. But again, don't really trade those numbers. Very often what you think the market should be doing, it doesn't do that at all. But again, we're now on a reset here. We can get a break of that structure high, fair value gap, retest of that area, then I'll be willing to go along. That being said, we've only got about, 15 minutes left?
Yeah.
Before the end of today's session. Is that going to happen? I don't know, guys. So, but that was a very good example of why it can be dangerous trading the news. Even though you do get your setup, you're trading into an important news event or important numbers that might be coming out that affects your particular market. And we talked about this earlier. Price could then eventually go in your intended direction anyway, but then you got stopped out, and now you have to make that back, and then the chances increase that you might take another loss, and then you get really frustrated, and then after that, Murphy's Law, price goes in your direction, and you're already sitting with a loss. So, how many times have that happened? Many times, for me at least.
Yeah, right.
Yep.
Protect your capital.
Right, so, Guys, I think let's just quickly look here at the NASDAQ. Very muted price action, guys. Same thing on the ES. This is very choppy. And this is to be expected, right? Especially on the FOMC day. So not much to do on my side. I think most of the action was in crude oil for me. Although by the time, if I do get a setup, it'll probably be after our session. So Unless you guys got something else to share, we haven't had any comments yet, guys. So, to all our viewers, please reach out if you've got any questions about anything
Yes.
you've seen here, anything trading related.
So
Let us know. We are here to help.
so if you have, for example, some long term, because short term we cannot discuss because of the Fed, but if you have some long term chart that we want to discuss or something like that, please share your opinions. We are here, so it would be interesting.
Yeah, I guess I could go into something about money management. Everybody likes to know more about money management.
Please do. Please
First
do.
thing, one thing I want to say is you got to make sure you have a system that works first, and you got to understand when it works. Is your system a trend trading system? Is it adaptable to ranging markets, to choppy markets? Does it work in choppy markets? Understand the conditions that your trading system works in and demo trade it. Demo trading should be the exact same as live capital trading. I never felt the fear when I transitioned from demo to live funds, just because it's the exact same procedures. I mean, I stayed on demo for years and years, so I pretty much just became so used to it. It never really dawned to me that I'm trading live capital. It was just you just add or take away zeros at that point. And
Yeah.
um, if you truly believe in your system and you've practiced and you know what is happening and how to deploy your system, then that transition is less it's less difficult. But um, one of the things I want to talk about is just initial stop placement. So for me, on lower volatility volatile pairs, pairs that are quoted at zero point 0.6, zero point 0.5, pairs like that, a 1% move, which is like 50 or less than 75 pips, I'd consider that a lower volatile pair. For those type of pairs, I'd like to set an initial stop of about 30 to 35 pips. Probably 30 pips is enough, but the goal of a initial stop for me is not for it to be hit. It's just so I can prevent an unexpected large loss. So if
The
there's an
worst case
unexpected,
scenario.
yeah, right, it's the worst case scenario. If there's some unexpected news event, and this has happened to me before, I entered into a trade, and the very like 5 seconds later, Bank of Japan comes out with the bank intervention, and
Mm,
the whole market just dumps. And luckily, I had that stop in place, or else my whole account would have been wiped out. So the goal of a stop loss is not for it to be hit. For me, it's not for it to be hit, because I'm trading with momentum on the intraday time frame. So the smaller time frames, I'm trading with intraday. What that means is when I enter a trade, that currency or pair has already been moving in the direction I want it to trade, and I'm just entering. It's almost like a sniper entry at that point.
yeah.
You want to enter and have that momentum continue. If that momentum fails or whatever, that's probably a sign to get out, if it stalls. But I'll get into more about that in a quick second. But for higher volatile pairs, my initial stop placement is about 40 to 45 pips. Some of the pound pairs, like the pound Aussie, pound New Zealand, I think a 45 pip stop is definitely warranted because those pairs are just extremely volatile. But another thing to take into consideration is if you have the right market catalyst, the market can turn a non-volatile pair into a very volatile pair. You can have 200 pip, movements with lower volatile pairs like the Aussie dollar. That pair is
Mm,
quoted at zero point 0.5, something like that, but it can certainly move 200 pips in a day. I've seen it happen before. It just has to have the right catalyst for it to be able to do that. So don't be don't only think that low volatile pairs will only move 1% a day. That's absolutely not the case. It's just initial stops. Again, since you're trading with momentum, it allows you to I'd say be more aggressive with your entries, just because you'll know if your trade's going to work within the first 30 to 45 to maybe even an hour, 35 minutes, 45 minutes to even an hour of being in it. Since I'm trading with momentum, on the smaller time frames, it's got to go into profit immediately. If there's any sort of consolidation or sideways movement for the first I don't know, 30 minutes, you know, in the 10, 15 pip range on a on some of these pairs, then I'm not really looking to stay in that for much longer. And you know, if it reverses 15 pips, it loses its momentum. If it reverses 15 pips within the first like 10 seconds, yeah, I'm out. You know, I just have that 30 minutes to an hour time frame set in my brain just so I know that I can recheck this pair, reanalyze what's going on in the markets, and see what's going on. But I'm pretty much monitoring. My eyes are glued to the screen that whole time. And before, unless my stop is at break even, then you know I'm constantly monitoring it.
Yeah.
When my stop is at break even, you know, when I get into a trade, I preferably like it to get into positive immediately. You know, 30 to 40 pips within the first 15 minutes. That's a lot. You know, that's best case scenario. And then move my stop to break even, and you're done with that trade. You can scale out lots. You can, you know, be at peace now. But before that point, you really got to monitor your trade entry. And
Mm.
you know, for things like gold, I like to have an initial stop personally of 100 pips, because gold is just so volatile. And um,
Yes.
even though my initial stop is at 100 pips, I'm really looking for the momentum to carry it into strong positive pips. So I have a wiggle room of about 50 pips on gold. So if it reverses, you know, 30, 40, 50 pips, then I think, you know, at that point, the market has shown me that it's not going to continue in that direction. And my momentum based entry has failed. It's not a, it's not,
Yeah.
it's, you know, it's a no go. But when you pair momentum on the smaller time frames with your initial stop orders, and you have larger time frame trend support on your side, like 4 hour D1 or weekly, and then pair that with a trend breakout, you know, a breakout that happens after consolidation period,
Yes.
that's the perfect scenario to be in. Not only do you have trend on your side, but now you have entry points on your side because you're trading off of
Mm.
consolidation. You're trading with intraday momentum. It's just it's a better position to be in rather than just getting in randomly on a pair. You know, there are, you
Yes.
know, yeah, there are some other things you got to be aware of though, such as what is the condition of the overall market. You know, that's why I do that spreadsheet that I show here every time I'm on. You know, what does the multiple time frame analysis on the larger time frame show? If every single larger time frame is showing, like today, the market is choppy, it's very tough. It doesn't matter what the intraday momentum is. It doesn't matter because the chop will spread like a virus and attack
We'll chop
everything.
you up.
Yes.
Yeah, it's gonna
Yeah.
it's gonna chop you out. Absolutely. Yeah, you can get into a position that seems perfect,
Mm.
a setup that's perfect, but then, you know, 20 pips after being in profit, you'll be, you know, it'll just reverse immediately. It's like a V-shaped reversal that happens. So, quick changes in momentum are very common in choppy markets, and that's why I don't like to trade that much in choppy markets. You know, unless there is some sort of strong, like very, very strong momentum. I mean, every single pair is going in one direction on one currency group, and every single pair on another currency group is going in another direction. So it's like strength versus weakness. You know, completely strong versus completely weak. That's a very good scenario to be in. But um, I think I've given some good advice and good ways to approach the
Absolutely.
market
Yes.
for especially the upcoming news. I think
Yeah.
you know, take that you know, into in your mind, and approach the market, you know, the news when it comes out. But you know, see how that works out for you. See how the intraday momentum works out for you, putting the charts on the smaller time frames all paired up side by side against each other. See how that works out for you. I guarantee you'll definitely enjoy it a little bit more. It's worked out the best for me personally, but you know, to each their own.
Yeah.
You know, that's just how the way I look at the market. But I
Yes.
think yeah, I've taken up all the time.
Yes.
Well, see that good pearls of wisdom, Nandan.
Yes. Yes. Just to add something that is always on my mind, and it is the problem with the stop loss is if we put a tight stop loss or put the break even very often, we will be in situation that we will be, you know, price will create some false breakout, we will stop out. Then very soon we will enter again into trade, and again and again, and just after that we see the high commission that we so many times enter into the trade and we did nothing, and the price was on the right track and the bias was good, everything was good, but we made a loss. And this is the huge problem. So just I want to say that sometimes just put the trade to breathe. So for example, yesterday I create a British pound dollar, 25 pips, I think stop loss, 25 pips target. It was the losing trade. I lost, but I just or feel reacts because I knew that the bias was bullish. It was just a periodic. In that moment, we just went a little bit down, and right now we are up again. Just to add, British pound dollar and euro dollar has some small push right now, because when we start this session, British pound dollar was in 50s, 55, 56, 57. After 1 hour, we were in a 60, 4, 5, 6, and now we are 7, 5. So every single hour, few pips, British pound dollar is going up, which means that the market is waiting for US dollar news, but preparing for something maybe weaker dollar. But we will see. We will see that.
Yeah. No, look, it's very true, Igor, what you're saying there. If you're feeling very uncomfortable or sweating, nervous when you get into a trade, then you're doing something wrong. You're probably trading with too large size.
Yeah.
If you're betting the house on any single trade, you're not in the right business here. It's about longevity, how long you can actually survive to have a positive outcome, right? So, it shouldn't affect you, especially if you've done everything right according to your strategy. You're going to get stopped out. Make peace with that before you get into the trade. So, that's... I know a lot of traders, all the emotional stuff, revenge trading, increasing lot size, trying to make things back. Then you're gambling. And, the market's going to take your money. That's for sure.
Yes.
But anyway, guys, unless you have anything else to add, we have reached the end of our session today. Great having you guys with us, Nandan, Igor, and to all our viewers. Thanks for joining. We have the next round of coaches coming up in, 10 minutes or so. So please stay tuned for that if you want to watch that. As always, thanks for watching, and we'll see you in the next one. Take care, guys.
Okay.
All right,
bye,
guys.
my friends. Bye-bye.
Good luck.
Yes,
Good
bye-bye.
trade.
Good luck.
Thanks. Bye.
Gentlemen,
Hi guys, how you doing?
Hey guys, how you doing?
good to see you both.
Howard?
Always a
Nice to
treat.
see Nice
Hey,
to see you.
Paul.
How's things going? All right?
We're good, yeah.
Ambiguous.
It depends on how the day finishes up, right?
Yeah, exactly. Right. So who wants to take the lead? I can. Howard, you can. Bruce, what do you want to? Who wants to take over?
I'm happy to dive straight in as I've got a trade on at the moment. So just to quickly show you what I've got, and then I'll hand it across, kind of thing.
Great.
So let's just present screen. There we go. Show the screen on that. 1 second. Okay. Okay, so it should be coming through. So basically, I'm sitting long euro dollar, a day trade. The rationale is that we've got this big basing process underway, and we saw quite a good kind of flush out after yesterday. Yesterday was a bullish outside day, where the low took out the previous day's low, and then the high subsequently took out the previous day's high. These are usually quite strong patterns. And then in the Asian session, we saw a kind of a pullback, which I think is the correction of yesterday's move. Nice 50% retracement, and obviously since basing out late Asia, early Europe, come up to retest the high just a little bit below it, and since then it's kind of flatlined, and it looks like a bullish consolidation before a push higher. So obviously we've got FOMC coming out in 3 hours. So I'm not going to be holding this position over FOMC. So it's really kind of a bit, I guess, a bit of a punt to see whether we can sort of smash and grab a little bit just before the announcement comes out. So that's essentially where I am on that. If just sort of stepping back a little bit and just talking a little bit about big picture stuff on that. So euro dollar long term is, I think it's in the early stages of an acceleration phase to the upside, where in 2022 we made a major low. We had the first leg higher within a new bull market, an ABC correction of it, a kind of a second wave correction of it in Elliott wave terms, and then since January this year, a kind of an acceleration phase has begun, I believe, which has taken out the wave one high, the previous swing high, and having done that, you notice that the last few weeks the weekly ranges have got a little bit narrow. And that for me is consolidation at these new high levels. So the euro is happy to be at these new high levels, and I think we are, FOMC notwithstanding, getting set up ready for the next thrust higher on this uptrend for euro dollar, downtrend for dollar index. So that's what I've got trade wise at the moment. I'm potentially doing a similar kind of thing on gold, whereby let's just go. Whereby we've had a 3-wave correction from the all-time high, which in Elliott wave terms breaks down again as A, B, and C, and since then we had that nice powerful recovery. So I think that's the end of a correction within the bull market. This is the first leg up, and we've just done a bit of a corrective pullback from yesterday's high. So corrective pullback. It looks to me like it's trying to base out after this corrective pullback. So I'm looking to again another kind of smash and grab before FOMC. If it happens, it may not happen. Should we start to break up through these highs on the intraday chart? So that's essentially what I've got going trade wise. So I'll hand it back across to you guys, and we'll come back for a bit later on, I think.
All right, really good. Bruce, how are you doing?
Yeah, good. Let's start by taking a look at the pound yen that we were talking about yesterday.
Yeah, that's right.
And let me just get the right place here. All right, there we go. So we have the pound yen that has been progressing within this large parallel trend channel. We were talking yesterday about the pullback following this bull flag breakout right here, this little parallel channel following a breakout of this pennant. And let me just go to the 2-hour. So we had a Gartley pattern down here, and we had the completion of an ABCD pattern. So in other words, there's some reason to believe that there was support found. Okay, that's the point. You know, is there support that was found that may hold? And there's evidence to say that that is possible. This 200 on the 2 hours here, the 100% ABCD pattern completes almost exactly at that low. And that is also around support of this previous resistance of this top line right here, or this line, depending on where we draw the line exactly. And then we have the 50% retracement as well. So the rally, going into more details, I'm going into the hourly now. So now let's just take a look at where potential. So here's a breakout, the other breakout, the following breakout, the more recent breakout right here that was above that high. And you could see there were a few false breakouts initially, but it broke out and now it's creating a little bit of consolidation higher up. So this is bullish behavior so far, where it's consolidating and indicating that it seems like it wants to go higher. Now, it did complete a basic ABCD pattern close enough anyway, so there's potential extensions and then the common confluence with the Fibonacci levels. And as I mentioned before, you know, the targets and so forth are just to give an idea. So we know when price gets to certain areas, we have to watch it and see what the behavior is like. So I'm just putting in whatever levels I think could have some significance. And the one thing I'm missing is a 38.2. Let's just throw that in. So, you know, I think the thing to understand is that we have a bunch of things going on here. And as I add layers of analysis, the structure becomes a little bit clearer. And then when things start to change, I can identify whether that might be significant or not.
Yeah. Looks like the 20's crossing above the 50 there.
The 50 what?
50 SMA. Looks like the 20's just crossed above it from below.
The blue is the 200 on the 1 hour.
Yeah, the purple one crossing above the yellow one.
Purple is the 20. The purple is crossing up above the 50. The 20, I'm sorry, the 20 is crossing above the 50. So that's also providing some confirmation of strength. So it would be surprising to see a little bit more of a consolidation, maybe a bit more of a pullback before it's ready to go. And like you said, we have the Fed coming out today. So I have a little position in this still because I think it has more upside. I'd probably buy some on a pullback. But of course, a break, you know, really below these lows right here, short term is showing not the kind of strength I'd want to see, 190.97. And I would then look for a re-entry at that point, more than likely, if I wasn't out before then. Okay. But a key part of this is that there's a potential, although it went all the way to the 78.6% retracement on this high of this downswing, there's still the potential, I think, to make another run and try to get closer to this top channel line, given the way it's been behaving off the bottom line. And this is a pretty clear channel. That doesn't mean that will happen, but I think it has the potential for that to happen. And that doesn't mean I'm going to try to stay in till then either. It just means that it's supportive of likely more upside in the short term. And you can see the 1-day bullish reversal here, as yesterday's high was exceeded today. And it looks like there's a good chance, or there's a chance, we'll see what volatility is like later, that it's going to close above yesterday's high as well, thereby confirming the bullish breakout. Now, the one thing of concern is that this pullback has been a bit deeper than I'd like to see relative to this swing low right here. And so that there's always caution no matter what trade it is, but in this particular case, I want to pay a little more attention to, or I should say, the pullback didn't show as much strength as it might. Now let me just get the levels here. So we actually went all the way down to the 88.6% fib, which is a long drop, not uncommon within Forex, but still it's showing a little less strength. Not a big surprise because it already had, I think, the primary run. This is kind of just a leftover bounce potentially. So that's the pound yen. The gold, I'm looking at the 4-hour now on gold, and you could see that. Oops, let me just take out some of my old analysis on this. So we went right to the 78.6% retracement today and then pulled back sharply. So it seems like the market has recognized that level. And the pullback has gone where? To approximately around prior resistance, roughly this high, this high, this high. Pullback found support there. So prior resistance becomes support. Certainly there could be a deeper pullback still. Let me just get rid of some of these old lines. Okay, but if we go to the daily or go to the weekly, you can see that this acceleration in the trend represented by the trend channel and the lower trend lines looks like it's holding because support was found on the recent pullback around the top channel line up here, this dashed line. And now we have a bullish reversal following a bearish reversal. So this is, I would say, extra bullish if it keeps going, of course, because last week there was a bearish reversal of this shooting star candlestick pattern. And then today there's a reversal of that reversal. So that can sometimes be when you get the sharpest, fastest, most aggressive moves. So far, it's behaving in that way. A rest day today is not unusual at all. I'm going to go now to the daily and actually healthy for the trend. But this certainly looks like it's going to new highs. And in that case, we can find some potential targets simply by taking a retrace of this decline, the extensions, I should say, of this decline, 127.2% and the 161.8% target. So that's 35.81 and 36.84. Those are two initial simple targets based on an extension of this retracement. And then we can also do an ABCD pattern now that we have this higher swing low. And you can see that support now is clearly at the 20 moving average purple, whereas before the test of support didn't take completely here or here, and now it's clearly support, which is also bullish. So if we do an ABCD pattern, I'll do an initial earlier harmonic level of 78.6%, and that gives us a target 36.40. Above that is 37.59. Now, I know that seems a long way up, but the way gold is moving, I think it has the potential to get there.
Yeah, I agree.
That means that unless it creates a double top, okay, so that's also possible. But right now, I expect a breakout to new highs, but that has to happen first. It hasn't happened yet. And then on the would you guys, Howard, would you mind just taking something for a second? I have to run to the other room for a second.
Sure thing.
I'm
Will
a bit
do.
of an emergency. Would you mind?
No
I'll be right
worries.
back in 1 minute.
Sure thing.
Sorry about that.
Okay. Okay.
I was just getting into it.
Yeah,
He's
yeah. I
such a
think
tease.
it's about to do euro dollar. Yeah. So I'll just quickly sort of backtrack on gold just to show I'm in total agreement. Obviously, I've got the short-term trade which I'm looking at possibly doing, but bigger picture, really, just the fact that starting off on the weeklies, obviously we're in an uptrend. Arguably, this whole thing has been overbought all the way up. Arguably, it was always underbought in hindsight. So yeah, we had that kind of long upper shadow on the weekly candle a couple of weeks back, and that saw the kind of slight follow through last week, but obviously we've since taken out last week's high, and it looks like we are ready to have a crack at the swing high on this one. For me, I was so the whole thing from an Elliott perspective, that breaks down again in a three-wave move at ABC, which is always against the trend. So if you've got any doubt as to which way the trend is, if you can identify a three-wave move, then that will keep you hopefully on the right side of the market. So trend is still up. The pullback being an ABC correction for me confirms the trend, and this kind of subsequent big kind of double thrust higher here, two big days up higher here, tells me that this is the corrective low, and that we should be heading up to to new highs. So again, anybody's guess how far this thing goes up once, if and when it takes out the high. But to me it looks like 38, 39 once we get there, but until we can actually make the break, then we can once we make the break, then we can start to put in projection targets based upon the kind of sub waves. So yeah, quite positive on that one. So yeah, back to the euro. So the euro is again similar kind of idea, except gold seems to be leading the proceedings. Let's start off with the weekly again. Let's go back to that. So we had that kind of swing correction again, A, B, and C, a correction of that first leg up, and then we've broken through the high of the swing. So more kind of shorter term stuff. So the look at the character of the market since it made its low. So you can see these big multi-week, 2-3 week pushes in the direction of the trend, and then kind of the corrections are really small. The weekly range is narrow. You get a slight push below one of the highest weeks, and then that turns out to be the end of the correction, and then the next week away we go. And I think that's really what's happening here, whereby we had that big 3 consecutive weeks green strong. The fourth week tried to extend it, but rejected and came back in, and obviously that is rejecting at the key level or after the break of the key level here. So there may be people thinking, well, that's kind of too much too soon, and this is kind of an overbought situation. But again, this thing has come back. There's no downside thrust on this pullback, at least not until FOMC comes out tonight in a few hours. But no, for me, it looks to me that last week's low was the end of the correction, in a similar way to that was the end of the correction there before we saw that big thrust higher. And of course, the trigger for me would be the break of the high of the low bar, which is last week's high, which comes in at 114.25. So if we get some FOMC movement where the market takes out 114.25, do not be surprised to see new highs in short order on euro dollar. So that's where we are with that one. So we looked at so with sterling is let's just take a look at sterling. So sterling had this kind of obviously long term. It's in a bullish trend since again 2022. That's the Liz Truss low down there. That's the sterling low, and that and since that point,
remind me of her.
Just so I'd throw that one in for good measure. Yeah, it's a bit like the Gordon Brown bottom with gold.
Oh man, you're sending me too far back. It's New Labour now. What are we talking about?
Yeah. Oh dear. So this thing obviously is in an uptrend on the multi-week, multi-month, multi-year basis. Zooming in more kind of shorter term. This year to date, we've been in a nice solid uptrend. We've reversed, pretty much all of this decline. So this tells you which way the trend is, pretty much up. And looking again shorter term, I think what's happened here is we had that first leg up, which got quite overextended here. We had that kind of shooting star long upper shadow candle on the week, and then the next week saw follow through to the downside, but by the end of the week, here we are, we're back up again. So we've kind of taken out all the buyers, taken out all the sellers, neutralized it, and then the trend continues, boom, like that. Last couple of weeks, we're obviously kind of we're seeing this kind of I think they call that a tweezer top in candlestick terminology, where you see two consecutive long upper shadows around the same kind of point, and it's at this high. It's at this high from September 24. So people, I guess, taking profits around that level. But again, this week we're starting to kind of nibble higher. There's been no follow through on the downside after this kind of tweezer top, at least not yet. So it makes me think that perhaps we've seen the low for the correction. I mean, there's always a chance that we could see one more push down to complete it, but it looks to me, just looking on to the daily, moving to the daily here. Let's just zoom in a bit. So we had that kind of really aggressive move up here, multi sessions without any respite for the sellers, and then a bit of a pullback, new high, no real follow through, and then obviously back into the range. And look, it looks to me like we're basing just ahead of this higher low on the chart. So maybe that is the corrective low, what we've seen in the last couple of days. But it certainly looks to be kind of quite constructive, at least in the short term. So again, maybe FOMC may come out and we'll see some kind of big lurch higher. I don't know, but for me, the technicals are still quite positive. So that's that one. On to dollar yen. So dollar yen, for me on the weekly on dollar yen, we're kind of in a topping process where this is at the end of a long bull market from 2011, way back. So the dollar has been appreciating against the yen over that whole period, and now it looks like we're kind of forming what looks like, probably you might want to call it a double top, or you might want to call it a kind of a crooked head and shoulders, with that perhaps being the left shoulder and that being a kind of slightly higher right shoulder. It's a little bit kind of a bit difficult to call in terms of what do you want to label it as. But for me, I think this first leg down, or this big pullback, is the first leg in a bear market. We've since seen an ABC rally, a corrective rally, which failed to take out the swing high, and then down we come. And then obviously we're gravitating back towards this big support level here, which I've got as my wave one low within a 5-wave downside sequence. And it's also the corrective low here in the previous bull market. So only natural, I suppose, after that big three and a half week decline, for that's me being taken out on the euro dollar, for this kind of rally, this kind of decline to run out of steam. So a little bit of profit taking here. Last week we saw an attempt at pushing higher from the in response to that quite strong engulfing candlestick there. But this week so far, we've retraced quite deeply into last week's candle. So again, that tells me possibly that last week was the corrective high within this new bear sequence. So again, looking for loss of just below 142, the figure. Should we break 142, that for me will say that we are ready to make new lows for this this downtrend. And I think a major top. I think we can start to see this thing really accelerate lower once we can take out this this key level down here. I guess that'll do on the dollar majors for the time being. Paul, do you want to jump in for a while?
Yeah, I can do. Bruce, do you want me to take over, or do you want to pick up where you left off?
Yeah, let me go back. I want to go back to the to gold.
Go for it.
And you have me? Okay. So I think there's a couple of things I want to point out here on gold. Number one, we can look at how the trend is accelerating, as I mentioned, by the lower trend line. So the you could see how the angle of ascent was down here at this trend line. Then it was higher at this trend line and the 50 moving average match. And now we have an acceleration at this angle matching the 20 moving average. And the test of the 20 as support before this rally, I think, is important to the potential success of the rally. I think that's a typical behavior before we get an accelerated move. And if we're looking at just the basic flag pattern, there's a preliminary rally. We're going to say that the breakout started above that high, roughly up to here, about 478 or 15.8% rally. And that something similar could be seen on the breakout of the flag pattern. And that puts us up pretty close to the ABCD target, because the only difference is I'm starting this leg up a little bit higher because I want to catch it when it really started to accelerate. And I'm assuming that is above this inside day high. Okay. But the ABCD pattern is measuring from the very bottom. So anyway, we get this zone up here around 3,759 to 3,790 or so as a target from the bull flag. And the other thing I think that makes that more possible, in other words, we had a sharp rally here before the pullback in the bull flag. We may have a similar aggressive rally. And we can see that the momentum to the upside is accelerating based on the angle of ascent increasing. That also tells us we may be getting closer to the end of the trend, but that end of the trend could be quite a ways up still. So that's what's, we're certainly on the third angle up, let's say, and that many times will be the final one, at least for the time being. So we've got a target of 3,759 to 3,790 roughly on the bull flag. Doesn't mean it's going to hit the bull flag target, but it has the potential to do that. Euro dollar, starting with the weekly, we had a weekly potential bearish reversal 2 weeks ago with the shooting star candlestick pattern top. There's a breakdown last week and it hasn't followed through. This week we have a stall with an inside day. So, or an inside week, I'm sorry. Going into the daily, we have this consolidation and lack of follow through to the downside. So I don't know what to do with the euro at this point, to be honest with you. If we break down solid below these lows, I would probably look to short it. But right now, it's holding up pretty strong. We'll see what happens with the interest rates and the Fed and how that might impact it. But we have similarity to the pound. Of course, it's holding up pretty well as also. And then the New Zealand dollar also holding up very well. And the Aussie dollar also holding up very well. So there's no indication yet for a decline other than the euro dollar and the head and shoulders top that we're looking at. But the longer it goes without following through, the way I look at it, the riskier it is that it's not going to fall through to the downside. And maybe it falls through to the upside instead. And if that happens, it could be aggressive because it's a reversal of this failed head and shoulders top breakdown, similar to what we were seeing. I think, what was it? I can't remember. Maybe it was the pound yen or something. So that's the euro. So nothing to do unless we break down. I'm looking to short it unless I see additional evidence of strength, particularly the high of the right shoulder at 1.1425. That's a key level that I want to pay attention to. Moving on to Bitcoin. And by the way, as far as the Fed announcement, I'm not going to do anything right away. I'm going to wait for 1 or 2 swings, and then we'll establish where the real trend might be and what I might want to be doing. Because no matter what happens, frequently, as you know, we see a swing in one direction, then we see a swing in the other direction, and it looks real clear that it's going one way, then the other way, and it doesn't do either, potentially. So we have this rising small parallel trend channel, which I look at it's similar to a rising bear wedge in the sense that it has the potential to break down because it's showing momentum is, even though the price is going up overall, momentum is dying off. And that means that in order to break out to new highs, it keeps going, it has to have a real jump in momentum, and the buyers have to really get more aggressive. And this pattern is showing that that may not be happening. So even if we get a new high above this 97,915, we're still looking at potential resistance at this top channel line. Now, this is not a perfect channel, so I'm going to keep that in mind. There's always the possibility that this consolidation evolves into some other pattern, and I'm going to start looking at it differently. The key support level at this point is the 20 moving average purple line, which is currently at 93,112. So if there's a break below there and it stays below there, then there's a good chance it comes down to test support around the 200 moving average at 90,692.93. That would be the next key lower level. So not necessarily too much downside unless these levels are broken, and that's certainly possible. And if that happens, then we're looking at the 50 moving average down here at 87,437 or so. But it looks like everything's kind of waiting for the Fed today to get out of these consolidation patterns and determine whether there's going to be reversals that happen. Now, I also want to take a look at silver.
It doesn't seem to move like gold, huh?
Well, I mean, eventually maybe, right? It's lagging, certainly, because it's not at new highs, but it's showing strength. You can see it's holding the 20-week moving average here for the last 4 weeks and this trend line. Otherwise, it's kind of choppy and hard to make much of it. So let's go into the daily and look at this behavior around the combination of the 50 and 20 moving average. It's been chopping around that zone, making a bit of a broadening formation type of pattern in the short term. A little bit like this. Right. I'm sorry, that's not a broadening form. I'm not sure what I was looking at over here, but it's more of a channel. So we have a declining channel of consolidation because we have one high, two highs. We got a top line, one low, two lows. We got a bottom line. And it's holding support at this line right here. So that means a breakout above yesterday's high of 33.25 is a sign of strength that could keep going. Well, we're not going to know on the bottom side really until it breaks below this low right here, and that's quite a ways down, 31.67 or so. So I'm watching how it continues to behave around this trend line. If it goes lower, I'll be watching the 200 moving average and see if it holds support of the 200, currently at 31.15. And also watching to see if this pattern continues to form as it goes lower. Does price stay within this small declining parallel trend channel? Because we have a potential bull flag setting up. We actually have a bull flag setting up right now. So a breakout of that bull flag would be on at this point would be on a rally above yesterday's high at 33.25.
Yeah, it's quite a nice kind of V-shaped reversal there from the previous bottom, isn't it? So from the end of 2024.
Down here, you're saying?
Yeah, quite a nice recovery.
Yeah. And this is a typical behavior where if it gets low enough and close enough to the previous swing, it becomes more likely it's going to take it out before it's done. And the important thing, though, like you're saying, is the reaction. So the reaction after hitting a low was very clearly bullish, and it stayed relatively bullish because you see we had an inside day. The next day pullback was minor, even though it broke below yesterday's low. It's really like backing up to prepare for launch. And then it breaks out above this high. That could have happened before. I don't know for sure. But anyway, later in the day, it broke out above this high again, and then broke out above this high over here and closed above the 200 moving average. So all that is very bullish behavior, indicating that this low is probably the end of the correction. And certainly the behavior since then has confirmed that.
Yeah, it's very similar, very similar price action to the S&P on the weekly chart, where you had the big reversal, small inside day, push lower, but then it was outside week rather. and it's gone up, kind of thing. So
Exactly.
stable. Yeah.
So until this gets out of here, I wouldn't be looking to do anything with it. And I'd be more inclined to look to the upside rather than the downside, even if it does go down, because I think this is probably a long-term significant low. Because of the subsequent behavior showing strength, the breakout above the 200, confirming it, the breakout above the trend line, the breakout above the two moving averages. Notice that that breakout occurred when they were both together, identifying a similar price area. And then the pullback has held support roughly around the 20. Now, that's not that critical right now because it's in a larger consolidation. So these moving averages are more for a guide than anything else to see how price behaves around them. At some point, they will take on greater significance. Now, you mentioned the U.S. market. We should probably take a look at that as well. Nothing much has really changed. We have consolidation today, inside day, around support above the orange 50-day simple moving average and the anchored volume weighted average price from the recent high. So since it's from the recent high, which is a key high, I want to pay attention to that and since it's joined with the 50 and this high right here, that creates a near-term support zone I want to pay attention to. If we get a rally above today, so let's say we close with an inside day today, and then we get a rally above today's high, currently 56.37, then that we could say is a bounce off a successful test of support of the 50 moving average. Now, it'd be better if it goes a little closer, but it may not. So we'll have to see what happens. And at that point, then we're still looking for an upside target of 5,726, which is a completion of the ABCD pattern, where the two, like that actually. Sorry, I had to move. That was actually, I had that on a slightly different high. I moved it slightly. So the new price is 5,748, and that correlates with the blue 200 moving average, which is currently at 5,747 and an anchored VWAP level from this swing low back here. So given the 200 and the completion of the ABCD, this becomes a high probability resistance zone, the way I look at it. Now, whether we get up there or not remains to be seen, but certainly a drop below the 50 on weakness is a sign that we'll probably see further weakness. And that is right now at 5,561. So the market is waiting for new information from the Fed, it looks like today. And if we go to the NASDAQ, let's just see if it gives us any more insight. Same thing, inside day on the NASDAQ and the Dow, inside day on the Dow. The only difference is the Dow is sitting at resistance of the 50, whereas the S&P is above the 50 and testing support, and the NASDAQ is above the 50 testing support. So what might that mean? Well, it might mean that there's a better upside move from the Dow than there is from the S&P and the NASDAQ. If it breaks out of this consolidation, it will also be breaking out of the 50 moving average. The only thing is, it's obviously been lagging coming off the bottom relative to the other indices. And that's not a surprise, of course, given the components. And then let me say something about crude oil. And I look at crude oil more for a swing, potentially, or, that's what I watch it for, I should say. So we had a potential double bottom here the other day on crude, following a breakdown of this bear flag. Resistance was found at the purple 20 up here at the high, and these previous support becomes resistance. And again, a test of the resistance at the 20. And then so the expectation would be resistance at the 20 on this rally, at least at first. And that's currently at 61.32. And that's a little higher than where we are currently. I think there's a good chance that this low holds for a little while. But of course, that changes on a drop below this week's low of 55.65. At that point, then there's the potential to go below this prior low and continue. 55.22 I have as a prior low. Now, if it can get above the 20 and stay above the 20, then I think it has the potential to test this resistance zone up here again near the 50, which is currently at 65.14, and maybe go higher to the 61.8 or the 78.6. This is a pretty steep decline here. So I think there has to be some recovery, at least in the form of consolidation, before it's ready to go lower with any consistency on crude oil. And you can see the oversold conditions on the relative strength index was pretty extreme. Not since 2020 was it that low.
Really?
Yeah.
So
For me,
those are a few of the things.
I've got to say, for me, I think it's undersold. I think there's much more to go because we just had the breakout from that descending triangle on the weekly, the retest, and now back down towards the low. So I think it's just one of these like temporary bounces. We just like maybe a 50%, 61.8% retrace of that last leg down. That recovery high looks pretty solid to me, but we'll see. We'll see.
Yeah, I can't. I mean, you know, I'm not an expert on this, but on this particular thing. But I agree, it's not looking strong at all. So what was the historical low? Did you say what year was that? 2000? What did you 16? What did you say?
2020 COVID.
2020. Oh God, really? We've reset back to that.
Yeah.
So I think it's important to also say that my analysis is not assuming anything's going to happen. Okay. So you guys are totally right. It could go to new lows, and it's certainly indicating that. And I would look for shorts up against these resistance zones potentially. But I think that, well, let's see what happens. So really, it depends on what happens, you know, what price levels we hit and so forth. Up until the 20 moving average, we were looking for a drop back down, a break above the 20. I'd be looking for further strength.
I would really like, well, I don't want it to do this, but I would like to exit all of my investment positions and then have Bitcoin also return to the level it was during the pandemic, because I was watching it, $3,000, $3,000 Bitcoin at March 2020. I mean,
Yeah.
give me that.
Yeah, so those are the main things that I'm looking at right now. And we'll have to see what happens. It's going to be an interesting day potentially. I don't, you know, if the Fed doesn't do anything, what is the market reaction? That's really the key question at this point, right?
I mean, I think that's, I mean, I don't know. I mean, you guys tell me. My understanding was that the Fed was, you know, last time we heard Powell,
I'm sorry?
last time we heard
What
Powell,
was it?
last time we heard Powell speak, I think he was trying to walk a very thin line with some of the politics, and he was trying to suggest that, of course, interest rates may be coming down later in the year. So I think, I mean, my understanding is that the market expects no cuts, and I think, I mean, am I right about that?
Yeah, I think so.
Yeah. So we just
I don't
don't
think the
want.
market expects any cuts.
So I think so.
And so in that case, then we should go higher. I believe, you know, in my opinion, and at least test the 200 moving average on the S&P.
Yeah, exactly. Yeah. I mean, I don't know, but that was what I was thinking. That's what I've been reading up on. So yeah, as long as nothing terrible happens, as long as he doesn't say anything terrible.
Yeah.
And I just wanted to also I wanted to reiterate too that the NASDAQ has already hit the 200 several days ago, almost exactly, but it hasn't hit the target from the ABCD pattern yet. Not that that matters that much. The 200 is more significant. So, you know, given the strong momentum here, is there enough to break through the 200 and keep going at all? I think that's unlikely. And we also have a swing high here of significance as well, because that's a lower swing high making up this downtrend. So another reversal signal will be given above this high of 20,292.
Yeah.
But I think the one thing we could say is that volatility is likely to continue, if nothing else, within this large, very large range.
Yeah.
If we go
Yes.
into the monthly, let's just look at the monthly for a second.
Yeah, it based out right at the previous high. I think prior to the 2022 decline, the pullback ended literally at that high, the previous swing high.
Yeah. So I think that's a solid low. But, look at Paul Tudor Jones was saying what he's anticipating or projecting potentially. And, everybody's opinion is valid at this point. And he's saying maybe a new low. Well, there's certainly an argument for that eventually, right? So I think you could argue it all ways at this point. But we'll have to watch price action and see what the market actually thinks. It is interesting, though, that the 20 moving average is clearly turned up here on the NASDAQ.
Yeah. A few crosses might be coming.
And not that that's a big thing. It's one piece of the puzzle,
Yeah.
right? And the same thing on the S&P.
Yeah.
So we'll have to, the key, I think, at this point is the behavior around the 50 moving averages, the potential support area.
Yeah.
If that breaks,
it's
then we go to a deeper pullback.
yeah, I guess it's still kind of falling, isn't it? The 50. It's not flattening out just yet. Whereas
Yeah, but that takes a little
takes
while longer to start to turn.
Yeah.
So the other thing, you may have noticed I have got anchored VWAP in here. This is something that I've been following and heard about for a long time and would use occasionally, but I've decided to start using it more diligently. And I have to say that it has, it's useful. I'm finding it useful. Either of you guys have used that?
No, I'm not
indicator?
yet. No.
Yeah, I mean, infrequently, I use other similar tools, but yeah, it can be helpful to give you an insight for sure. I mean, those tools I tend to use to orientate myself to the setup or the what's happening, just to get a sense of things. I don't really use them to trade, just to orientate myself and see where I should be doing. But yeah, they can be really helpful. I think you just need to know when to bring them out and when not to bring them out with anything really. But yeah, it can be helpful every now and again.
Yeah, and I was just going to say, I was just looking at this high over here. This was a higher swing low back here, right? When we broke through that, that was the trend reversal signal back here.
Yeah.
And support became resistance pretty clearly before the continuation of the decline. So I think this high here takes on greater significance, 5,787, than I was giving it just a few minutes ago, because of the 200, but also more significantly because of this lower swing high. And the price structure of this downtrend will change if there's a rally above that high. So even if there's a rally above it and a quick failure, that shows that the buyers underlying are there, and I would anticipate less of a pullback in that case, and then a follow through to the upside. So we're in an interesting spot right now for these indices.
That's for sure.
Yeah.
And then let me look at the dollar yen real quick. I thought something might already happen with this, but it hasn't. So it hasn't been able to get back into this range right here. If it did that, I think there's some upside. If it doesn't do that, then I would anticipate a continuation to the downside. But we'll have to see what happens next. This weekly high and low are going to be key. This support and resistance. This week's high 144.99, and the low is 142.35. I think that'll help define where it might be going next.
Yeah, I must admit, I mentioned it a bit earlier that I've got that as like a building massive top pattern after the rally from 2011, which is a bear market rally in the grand scheme of things. I think that the pullback, all the way back down at 2011, that's like the bottom of the the long-term bear market, and the whole thing's an ABC corrective rally from the low, three waves up, which is just kind of finishing. So I think that double top breaks and we start to see some acceleration lower. But obviously, as you say, we've got to watch it from day to day just to get the right entries.
Right, because the market's going to do a lot of things in order to trick us and fool us and make us think something different is happening.
Absolutely, that happens a lot.
It sure does.
Yeah, everyone's trying to take your money.
Yeah, I think once that goes, that can be quite aggressive, really.
So yeah, we'll have to. So you think we finish this ABCD so we have a deeper pullback? That certainly makes sense. We already broke this trend line. We do have the 200-week moving average right here, which correlates with this swing low right here, roughly.
Yeah, it's a
but
lot
we
big,
did
big,
test
big,
that.
big, yeah, big support. That was it around just below 140. Big support. But I think the bounce we've seen off it the last couple of weeks, maybe it finished last week. Maybe it's over. It looks like an ABC.
Yeah, and we do have a. Let me just look at this little pattern here. We do have a bit of a possible flag here. Let's see. A little bit of a flag breakdown pattern right there as well on the short term. This is the daily. This is the daily. So this would say that a break below today's low of 142.35 is a continuation of this bear flag for short term.
Yeah.
Yeah,
and then I'd be looking at this.
It didn't even have the strength to touch that diagonal line, did it? So it's really struggling.
Say that again. I'm sorry, I didn't catch that.
I was just saying that it's not showing a lot of strength because it's even struggling to retest the primary diagonal resistance line as well. So it's really struggling.
Yeah, and it kind of stalled within that consolidation. There's a little consolidation going back a few weeks, so it's struggling on the upside. But yeah, we'll see what the FOMC does. It might give us a big blast higher, and it blows it out for the time being. On the one hand.
Yeah, lots going on.
Yeah, I mean, there could be surprises from the FOMC given everything going on. You know, his comments about various negotiations or whatever. You know, or some surprising things. Maybe there's some things we don't know about. You know, I heard a number of things when we're near the lows about margin calls and funds or large asset managers that may have issues or market structure issues that may have started to happen and so forth. Those things sometimes take some time to evolve. I'm not suggesting that he's going to say something about that, but he certainly could, because when you have this type of moves in markets and interest rates and changes in tariffs and so forth, you have unexpected volatility that sometimes catches funds in the wrong direction.
Completely agree. I think that the picture has become more complicated. You know, we're trying to not just deal with interest. Excuse me, the world, everybody, we're trying not to deal with. The United States is trying to deal not just to deal with interest rate and inflation now. They're trying to stop a recession, right, which may be already there. So, you know, it is a complicated picture, and I think surprises. I'm not saying there'll be surprises, but I think certainly out of any of the meetings, a surprise. You know, if a surprise is going to happen, it'll be this one. And I think because there'll be a lot. We don't want to get into politics of it, but there's a lot of political pressure for sure. There's a lot of multi-dimensional elements to it, as you said. So we could see some surprises. I mean, I would like stability, just like, you know, but there's bigger problems to deal with. So it will be interesting to see what happens for sure. And you know, I think, you know, how the market will react. Well, let's find out tomorrow.
Yeah, the dust settling.
I just threw this head and shoulders on here because I wanted to, I hear a lot of stuff about patterns and so forth, working or not working or whatever, and particularly about the head and shoulders. And, I got to tell you, I see these things all over the place. Now, if I see a head and shoulders, doesn't mean I'm trading it in a classic way necessarily, because it's just another way to identify a top, right? But what's interesting here is you can see that even within the large consolidation, first of all, it's contained within consolidation. So I want to know that, right? It's not up there all by itself. But we did have a break through the neckline and then a test of resistance, and then a larger swing back to test of resistance, roughly around the neckline. It happened to be the 50 moving average, and then it continued on its way. So, and then we also had and so now we have this bear flag. So unless this bear flag shows it's not following through, when does that happen? Above yesterday's high at 144.27, in the way I'm looking at it. Okay. Because this bear flag is formed against resistance of this trend line. That makes it a little more interesting than normal, but at the same time, it's holding previous support. So we've got kind of different things coming together here.
Yeah. Do you think this is more kind of reflective of the dollar or the yen? This kind of bearish looking situation. I mean, I personally think it's the dollar.
Yeah, I mean, I think it's probably the dollar at this point, because the dollar is trying to reverse, and it hasn't been able to do it, of course, similar to which. But I think that we have to look at gold as a potential warning sign. Gold had a bearish reversal; it was clear, and then it went the other way.
Yeah.
So we're seeing that in the New Zealand dollar and the Australian dollar. In other words, they kept rising as opposed to, well, it's not totally rising, but it came back closer to the high on the New Zealand dollar. And on the Aussie dollar, it went to a new high recently, while the other guys were consolidating, right? So there's lots of indications that they seem to want to go higher. And if they reverse in the other direction, there's quite a ways they can fall if they actually reverse and keep going. Okay, as opposed to just coming down, finding support, and then rallying. So because this is a pretty good size swing, if we back up on the euro and go to the, oh wait, it wasn't the euro. Yeah, so one of the things I like to do too is look at symmetry or measured moves. So if we look at this current swing, it's up rough about 13.7% from the low to the high. This previous swing back here was up 15.7%. A swing meaning relatively consistent advance, okay, similar to what we have here. And this is similar to a flagpole, a flag, and then the follow through breakout to the upside. And that would indicate there might be more upside because they're not matching on a percentage basis yet. 15.7% would match up here at 1.1785, which is aligned with the 161.8%. Let me make sure I get the right extension of this decline right here. That's a minor. It's relatively minor, but still, it aligns.
Yeah, I think it's got a long way to go myself. It looks like a major breakout. The bear market, I think, started in, or the last bear market was 2008 down to 2022. And that was a corrective decline, didn't take out the previous low on euro dollar. So I think this is the early stages of a multi-year bull swing for euro dollar. And also of note, Republican administrations tend to see double-digit declines in the dollar for whatever reason.
No comment.
By accident or by design, who knows? Trump 1, Bush 2, Nixon, Reagan, Bush was kind of Reagan was boom and bust, and Bush was kind of new lows for the dollar. And Obama and Clinton were both positive, and so were Biden. So interestingly enough, I don't know why that happens, but it just does. Fun fact.
My post-it note which says no politics is on fire right now.
But how politics relates to the markets is exactly on point.
Yeah, sure.
Let me say one other final thing on the euro dollar here. We were looking at that rising small parallel trend channel. We have that pattern right here on a different time frame that we were looking at on Bitcoin. So we have that pattern right here on the weekly.
Yeah.
And then it broke down through the bottom. Similar type behavior.
Yeah. Well, let's hope historical.
So let's just look at let me just take a. Go ahead. I'm sorry.
No, don't worry. I'm just commenting. Don't worry. Carry on, please. Thank you so much.
I was just taking a look at the pound dollar. The pound dollar, we got to get out of this consolidation as well, of course. Also showing a lot of strength overall.
Yeah.
So, yeah, I mean, let's see what happens. It's going to be interesting. But if I'm going to short any of the Forex pairs, it would most likely be the euro dollar if there's a signal.
Yeah. Okay. That's really good. Very thorough. I think, it's these sessions, or rather, these moments before the FOMC are always a little bit tense isn't the word, but it's something similar.
Yeah. Yeah,
Thanks for that.
you never feel totally strong about a short-term trade. I think ahead of something like this, you just need to let it come out, let the dust settle, and then maybe go again tomorrow.
Well, I'm actually in a trade, and which I'll talk about. But always a bit nervous. But then again, the second I start feeling anything, I'm like, stick to your plan. Just if it stops out, it stops out. But I agree. I mean, there's certain times in the week which I'll tell my students that you just shouldn't be trading. But of course, but let's have a look at the crypto market, and I've got some fun ones. Let's have a look. So let me know when you can see my screen.
There we go.
Okay, so first, let me just talk about the trade I've just entered. So GMX, GMX I've actually got out of because I entered here. Then I decided I didn't want to get. I decided that losing the 200 here was a bit problematic, and I felt the bullish premise might be over because it just took a little bit too long to come down. So I did enter the position, but then I just set it to exit, and I've just got out at no loss, which is part of my strategy, right? My stop loss is down here, so I exited that position. But Jupiter, which is a top altcoin pick this week on Honor Prime X, I've entered this one on a couple of platforms actually, and we've got a bit of divergence showing up. So when I was looking at this is why I entered it. Well, let me just turn off the divergence indicator. So I was looking at this and I was like, okay, this is a B setup, but we've got a few things coming the next few days. Also, Bitcoin is in decision zone, so we could have a pullback, we could go higher. However, I obviously noticed that we had some divergence. Now, divergence for me kind of pushes sometimes a trade over the edge in terms of I'll commit to it, because divergence is the closest you can get to a crystal ball sometimes, certainly in crypto when you're trying to make sense of all the volatility. So I'm in this trade. I'll just bring up the thing, and it's just sitting where I got in, so like tiny amount of profit. It's only a small position, of course, because we know that there's a few things happening this week. But yes, we entered here and we're just waiting haven't got any kind of bullish signal from this yet, so we're just sitting here. But if I do see say a confirmed break below here, I will look to exit before my stop loss gets hit. So I'm being very cautious, but so far that's as it is. And my MKR position has still not filled. So waiting for the price action to come back down to this moving average and just hit it. So I've got a nice confluence. And I mean, it's good that it's showing resilience, but I don't want to have it lose resilience the second I enter my trade. But I'm waiting for that one. Waiting game, obviously, when you're not doing intraday stuff. But the idea is just to bounce here and just take profits at the 618. That's the premise of the trade. So I'm just waiting for that. But let me just show you. And I just, hopefully, I'm hoping that MKV will arrive during one of these sessions, because I've been waiting for it to MKR, excuse me. I've been waiting for it to hit. And I'd really like that to happen during this one 1.5 hour, but I don't think it's going to happen this time. So we'll just have to wait, maybe tomorrow. But this is a lever. Now, this was another top altcoin pick, which is just the video came out today. And I just so we had this perfect A setup, which we've previously talked about. I won't go over it again, but we had a nice breakout, and just it's a small cap, so it's a low cap, so obviously it went completely up, and then we had almost a full retrace as well. But then we had this nice confluence with the 4 hour. Now, the premise of this trade was to buy this hugging of the moving average, expecting, of course, a bounce, because this sort of retrace, this is exactly where buyers are going to be looking in to maintain the bullish context. But as you can see by this wick, not particularly tradable, unfortunately. And if we zoom in, we can kind of see some of the issues. Now, there is a way to of course trade this, but this kind of level of volatility makes it extremely difficult, and stop losses are going to get hit left, right, and center. So very challenging trade. If you had obviously come in here, you could have caught it, but then the second it jumped in, your stop would have been hit for sure, right? So impossible trade, unfortunately, to take, which is why these low caps are so much fun to trade. But just that was quite interesting. And this is obviously, this is the problem with trading some of these smaller caps in the crypto industry, because the trade is played out perfectly. You see the candle body close is above the 200 MA, which maintains the premise of this trade. But this wick would have just the people out, and arguably it might have been a short squeeze of some kind as well, which added to this. But just wanted to mention that. So I could usually, another YouTuber or another commentator would say, "Congratulations, everybody! My setup from yesterday brought you in a quick 33% in a few hours." But I'm going to tell you that this was untradeable. So if you did manage somehow to trade this without getting stopped out, many congratulations. Please get in touch, because I want to shake your hand. But that was leave. Any thoughts on that, guys? From your,
or maybe if you don't use a stop, then you might have been lucky and just sort of shut your eyes and your ears and everything, and come back and
Well, I do have a strategy which doesn't use a stop, but I never talk about it and I never promote it because it's crazy. So let's just leave that where it is. But it's one of those things. So if you're trading a low cap, you automatically know that you need to have a smaller position, right? Regardless of whether you're doing whatever platform you're doing it on, right? You need to have a smaller position. And because of that, like micro positions, right? Because if I'm trying to trade with a larger amount to obviously, lock in some profits from smaller, like 4 or 5% moves, which are still very big compared to like the Forex market, that's fine. But when I'm trying to, when we're dealing with low caps, the volatility is so extreme sometimes, you just end up just entering and you get stopped out. So the idea would be to enter with a very, very small position, just appreciating the fact that you're just going to, it's going to go off the table. Draw a line in the sand, maybe down here where you're going to look to get out. But that would be an approach. I'm not recommending it, but this is the crypto Wild West, and there's many ways to approach it. Obviously, I'm more traditional TA and risk, appropriate risk management. But when you're dealing with these low caps, you've got to have a slightly more kind of kamikaze strategy, to be honest. But just yes, we've talked about Bitcoin. You've covered it quite well, but we are sitting in this kind of zone. We've had this golden cross, which is great, which kind of complicates any potential retrace. So it could go either way right now, because there's multiple support areas here and multiple resistance areas. So it's pretty neutral. And if we look at this, we can see a more bullish context. But then if we look at this, we have a bearish context. And likewise, the point of control is resistance, but we are in this upper range. So this all-time high it's not far away, and it is quite within reach. So the issue is what we've been talking about. And I wish Bitcoin would do something a little bit more interesting, so I can not talk about this higher low anymore. But we want to have, we want to have a retrace to the 200 MA to confirm that has properly flipped, just for good quality market structure. And then we want, of course, that higher low, because we've had a higher high now, which is great, but we still haven't had that second part of the thing. And for the rest of the for the trend change and for the rest of it, the rest of the crypto market. That's what they need to see. They want stability, and they need to make sure this isn't just going to tank if we get some bad news. So that lower high we're still waiting for, but I don't really want to talk about that anymore. And you can see here, this is Bitcoin's price action over the last couple of weeks, and we were in this triangle, and Bitcoin just said, okay, I'm breaking out. Oh no, there's resistance. Oh, I don't care about this triangle. I'm going to do a bearish retest and just go straight through it again. So Bitcoin really doesn't care at the moment, and it seems quite, the only thing is there's not much volume here on this move upwards, so it does show that this area is weakening a little bit and a little bit of a retrace, but we've come up quite a way now. Anything back down to this area still maintains a really good context. So I wouldn't be surprised if Bitcoin pops its head above resistance over the next few days, but I would like to see a pullback for sure. And again, here's a 30-minute, which is just zooming in on this particular triangle, trying to be helpful visually for people. So it's all over the place. It's pretty neutral, to be honest. So it'll be interesting to see how it reacts a bit later. But this is Bitcoin monthly. And the biggest question in crypto is always like, when are the altcoins going to, when is the next altcoin season? And is Bitcoin going to continue upwards? Is this the end of the bull run? Is this it? Is it over? Or is Bitcoin, so this is a really straightforward chart. Really, 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 really simple. This is log scale, just to make clear on the top. I think it's log scale. Let me just check. So it's logarithmic. So previously, these hot vertical lines represent the previous bull cycle tops. This is, of course, the most recent. And you can see it coincides quite consistently with very extreme overbought conditions on the RSI. Now, the last bull market, there is an argument. There's two arguments here. It didn't quite get as hot. Look, 90 is hot on the RSI, but it didn't quite go as hot as the previous because of the pandemic economic headwinds. But there's also another argument that because Bitcoin, of course, is growing tremendously in size. It's one of the biggest, equivalent to one of the biggest companies in America. So it's comparable to Google. It's just beat Alphabet in terms of its market cap. So when an asset gets that high, it's very difficult to get it to cook this hot, where it's like almost approaching the 100 level. And you can kind of see there is a bit of a pattern where, that back in, its first kind of major end of the cycle, back in 2011, like 100 on the RSI, which is just crazy. And then the next cycle, it's not quite 100. And then the next cycle, it's a little bit lower. And then we had a bit lower here. So we're not suggesting that we're going to come back into this zone. This is, of course, a historical precedent which we can look at, and it also shows that we're nowhere near this area as well, and that gives Bitcoin a lot of levity to come up to the sort of targets which people have been talking about, including me, which is 250k, 300k, that kind of area. So you can see lots of room to go up, but just because it's happened before doesn't mean it will happen again, especially considering the mainstream adoption of Bitcoin, which may be taming these kind of reactions or supercharging them. And I'm not quite sure which one is the truth, but this is obviously answering that question. So but we were talking about the money flow last week. I don't really want yesterday, and I don't really want to go into that again today, but just briefly, this is not good for altcoins at all. However, it is potentially it's the concept that the night is darkest before the dawn, and you see previously this is the last altcoin season during the last bull run, which was unbelievably epic. It turned, it made me a lot of money with a variety of different assets, just in a very short space of time, and we're waiting for that to happen again. But coming up here, Bitcoin dominance would mean that the whole cryptocurrency market has shrunk significantly compared to Bitcoin. Now, this is proportionally, of course, because the altcoin market has grown compared to where it was 4 years ago, but Bitcoin has grown so much faster. It is so big now. So what we want to see is, and this is the key point I'm trying to make. So Bitcoin dominance is going up, not good for altcoins. But look, over this last few the total last few weeks, total 3 has also gone up, which means that it's not a case of money leaving the altcoin market. It's a case of simply Bitcoin is growing faster than the altcoins. Now, what we want, and there's 2 scenarios we're looking at. Now, what we want to see is Bitcoin continuing higher like this, which in terms of Bitcoin dominance, which would mean more people are buying Bitcoin, which is currently what's happening, right? And then we want, of course, it to reach the peak tipping point, where then people see Bitcoin is going bullish. They hear all the news articles. Bitcoin's broke 150K. They start entering their altcoin positions as risk assets. And then that proportion, that balance shifts, which means, of course, the altcoins then start growing much faster than Bitcoin, even though Bitcoin is still bullish and ascending higher. And then we get this, which is all of those sort of trades we've just been looking at going to the moon, not 50%, not 100%, 5,000%, 7,000% sort of gains in a very short period of time. So the money flow may be changing. It may be changing, and the weather may be shifting. And the narrative that this is terrible might actually be not so terrible, and might actually be the last leg up before we see some downside, some downside, which is good for the altcoins, which means upside for the altcoins. But
how long do these generally last? How many years that you tend to find that the alts don't do as well as Bitcoin? Is it a number of years before it kind of flushes people out, and then they decide to jump in?
That's a good question. Yeah, let me. This is the first time they've depegged, essentially. So let me just kind of explain. I think I'll find the right chart. I think I've labeled this one properly. Halving. Let me see if I can find it. It's probably the best chart to bring up to illustrate this point. Yeah, okay, this might be it. Wow, I was organized. Okay, so this is to answer your question, which is very helpful for people, I think. Usually, historically, this is the previous halving events, right? 2016, 2020, and then one back last year. And historically, it's been about 240 days following the halving, which Bitcoin dominance has then broken down. And that has coincided with Bitcoin's bullish moves as well. Now, this was 240 days, right, which was approximately where the US election was in November. And we started to have the breakdown, right? We started to see it just like we started to see it here, okay? But it then, of course, reset as the reality of some economic issues started to take form. And now this cycle has been broken. This pattern has been broken, because now we're way beyond 240 days and Bitcoin dominance is continuing higher. So it's not happening the way things are supposed to be happening this cycle, which, if you think about all the stuff which has happened between 2020 and now, ETFs, institutional adoption, of course things are going to behave differently. Of course they are. The altcoin market as well is a very different space too. And you'll notice, of course, just bearing in mind that, as Bitcoin gets bigger, we'd expect these moves to maybe not be as significant. But this is something obviously wait and see. But what comes up must come down at some point, and this can't continue going up forever. So we just need to pay attention to what's happening. And we might find that the bull cycle is extended, and we might find the whole 4-year cycle kind of shift on its head a little bit. And like you said, Howard, we might see altcoins having more of a latency before they start to move. And they may almost decouple completely. And even if Bitcoin is in a bearish scenario, they might be doing other things. So it's going to be very interesting what happens. But what we predicted to happen based on historical precedents hasn't happened yet. So I can't really answer that question other than what we expected hasn't happened. And the altcoin market, it just isn't following Bitcoin as it should. But if we look at total 3, we are and we just get a bit of perspective, just a bit of cold water. So this was when Bitcoin broke all-time highs back in March 2024. Now, the altcoin market is on the flip side of that, right? It is on the flip side. So that's good. That's fine. But we don't want it to come back down here. We need it to continue upwards now. And we haven't had confirmation of that. And if we see a higher low from Bitcoin, we might get that. And then we might have that cascade start to happen. But risk assets, of course, are going to be very inhibited by economic issues. And it doesn't matter what people are seeing. If they are very fearful and they're uncertain where to put their money, they'll buy Bitcoin. Sure, they'll buy gold, right? And so forth and whatever. But will they invest in Pepe? Will they invest in Ethereum, right? Will they? And I think that's the question we're waiting to see, because risk assets need better quality economic environments, right? They need more stability, whereas Bitcoin may thrive in this chaos, right? Because it may be determined as a good store of value. So What happens next? I'm not 100% sure, to be honest. And so I mean, any thoughts on that? Any contrary opinions?
Yeah, maybe if say the low that we've seen in the stock market holds and we come back to the bull market, we make new highs, maybe that will see a kind of broadening out of the crypto participants in the bull run. Possibly
Yeah.
that could be the catalyst. If
Yeah,
the
I
stock
think-
the stock market just grinds on up to new highs like it always has done.
Yeah.
What about Bitcoin regarding as a substitute for gold? You think now that gold's about ready to maybe head into new highs, that could be a catalyst for Bitcoin to follow? And if it does, do you think that will be part of the reasoning behind it? What do you see in that regard, if anything?
Well, I mean, I haven't looked too much into any correlation with gold at the moment, other than what happened in the 70s. That sounds like a joke, but I actually did do that a couple of weeks ago in a live stream. And there are similar patterns to where gold was in the 70s and how it just exploded. And maybe Bitcoin's in store for that. But the correlation for me is very simple. Gold is a safe store of value. Bitcoin is the digital version of that. And I mean, just today, Scott Besson from the United States, he's being grilled a little bit at the moment in Congress. He said that he wants the United States to be the best place for digital assets, right? Which is fantastic. And if Bitcoin, I think Bitcoin is going to probably do very well because of its de-inflationary model, for sure, right? It has that, and it has a 4-year cycle which it's locked into, right? But if the altcoin market loses kind of the let's go of Bitcoin, it's difficult to predict what's going to happen. But I do see Bitcoin as being, the equivalent to gold. I do see that. I think everyone sees it as something to put their money in, governments, everybody, and I think so. We could see some crazy stuff over the next 12 months, seriously crazy stuff. But the issue is Bitcoin's bullishness in the future enough to offset the economic headwinds and the perceptions of risk assets? And that's a difficult question to answer. I mean, if bonds are a difficult place to put your money, if cash is a difficult place to put your money, if stocks are a difficult place to put your money, then people will look to crypto, of course, especially if they're bored of not having any decent gains because of all the volatility. So we could see that. But Bitcoin, super bullish, yeah, for sure, 100% on answer to that question. But the issue is, of course, for me, I don't really trade Bitcoin. I use it as a measuring tool for the weather conditions in the market, and then I use Bitcoin to provide confidence. So if Bitcoin is at support, then that's my perfect opportunity to enter a long trade with the altcoins. But it hasn't been good really for the altcoin market. And you look at crypto and you think, right, is it going to last? Well, I think crypto is going to last, but are these crazy moves from the altcoins are we going to have these definitive cycles where you can make life-changing money in just a few months, or is it going to be a slightly different proposition like Lever, which is just a little bit difficult to predict? So I'm not sure, really. But just moving to great questions, by the way, that's really helpful for people. AVAX, this is AVAX, and the theme this week with altcoins is golden zone time. So this is Avalanche, and we've had a double bottom. Just bearing in mind, of course, not all double bottoms are created equal. This is technically a lower low. We haven't had a higher high yet, so we are technically in a downtrend, people. So just be cautious of that, because we haven't surpassed the previous high, but we are entering this lovely little golden zone, which could be a great place for a reversal. And it seems to be coinciding, with the obviously this is the neckline from the double bottom, but it's coinciding with this kind of nice little retrace area. So you're looking to a move into here, and then MK, not this one. Where's the other one? I think I've lost. There's another one with the golden zone. I can see if I can find it. Yeah, Floki. Here's Floki. So the Floki's again got the golden zone coming down. But as we talked about when we're selecting setups, if you're looking at Avalanche, if you're looking at AVAX, we've got the 618, we've got the 0.5, and the 618 would be a great place to come in, just principally as a support level. And you obviously have a little bit of confidence because it is the 618, and it's not just a regular everyday support level, right? It's not this one, right? It's this one. But if you look at Floki, this has the moving average coming up. Right, it's just a 4-hour, but the 200 MA on the 4-hour is still quite significant. So if you're thinking of it, sorry, that was my dog. If you're thinking about coming a trade and you're looking to buy these golden zones, well, which one are you going to pick? You're going to pick Floki because it's got more confluence, right? Really straightforward. I mean, it's very similar. You got support beneath, you got support beneath, but the moving average here, I mean, it's a different time frame as well. But you know, this is the sort of thing you need to look for. There's a potential short opportunity here as well. So you know, golden zone territory is all kind of coming up. And then just I want to talk about just briefly BNB to finish. So this is Binance token. Made me a ton of money last cycle, so I'm a big fan of Binance token. I bought it when it's like $12, and then you know it was just now it's obviously 500 or so. So it was a great. It's 50x that did that 50x my money, and that was incredible. But obviously Binance token now is established itself, so we're not going to get those kind of gains from that anymore. But we have this symmetrical triangle. So once you've got the FOMC out of the way and you're looking for something to trade, then these triangles are fantastic because they just, break out this way, go, break out this way, go. Now, what's the issue though? So there is a bit of a bullish bias. This range just seems to be established. We're above the point of control and we're holding above the point of control. So, you'd expect maybe this will be more of a long trade, especially, but the issue is we've got the 618 as well. So this is a little bit of a difficult proposition. So if you find a way to buy the breakout here, you may want to take profits on the 618 and then just do this, right? So take profits there and see what happens. And if we break above, then there's another trade here, really straightforward, because a retaking of the 618 is quite significant. You can see it's pretty decent resistance. So there's a couple of trading opportunities here, but don't just enter on the breakout here just below resistance unless that's the only trade that you want to take. If you're trying to hit key resistance, you probably want to wait for this and then enter here just for bullish confirmation. But yeah, BNB pretty reliable. But I also just want to point out where we are in the big picture with BNB. Right up here is positive price discovery, right? So we're very, very close to, next move up would be all-time high. So there's going to be a lot of sellers here, but this is kind of the deal with BNB. And if you're looking at BNB long term, a move above here would be very bullish. But it's a nice little range to trade potentially. But as we said with altcoins, or rather the cryptocurrency market, very difficult to see how they're going to be reacting. And what we do know is if Bitcoin, of course, has a move now, the market will follow, regardless of what Bitcoin is doing. But any little movement now from Bitcoin, which comes down, right, even like the healthy retrace we're looking for, this will probably go to the downside because Bitcoin dominance, as we've established, isn't giving us the best conditions. And even though right now, it's more a case of Bitcoin is outpacing alts because Bitcoin is kind of holding its own with a bullish context. Bitcoin dominance is going up. But if Bitcoin heads down, we're in worst case scenario again, and things are going to get hit quite significantly. So lots of setups to check out. Jupiter, as I said, I'm in. I'm just waiting for this entry. And maybe, as I said, step away from that one. But yeah, quite a few setups to look at for the next few days, but definitely wait until we've heard what happens out of the United States over the next few days. But that's me for now, I think.
Well, I feel up to date now on crypto.
Well, I need to speak a little bit longer than that to get you up to date, but yeah.
Well, quick up to date.
Yeah. Robert's got a question. Sorry, I think we forgot to say hi, Robert. Hi, it's good to see
Robert,
you.
how you doing?
Paul, now that you've shown that, do you leave the trade in MKR pass or fail, or do you move stop loss? Do you leave that trade in? Yeah, look, yeah, it's a great question. So when you're looking at trades, of course, that GMX trade I was in, which I essentially decided that the premise had moved on, right? I was looking for a support entry, and I realized that the 200 MA was getting away from the support line. I didn't have the confluence I wanted. It was going to cause a few problems, so I just decided to exit. Now, my whole trading plan is always based on being able to do that, right? Because we're dealing with volatile assets. So I never want my stop loss to be hit, of course, like no one does, right? But it's positioned in a place. So ideally, if the premise of my trade falls and the price action comes down, like it did with GMX, I know you're talking about MKR, but I'm getting there. When GMX comes down, it then comes up for a bearish retest, and that's my exit. So with MKR, everything's fine still. It's holding its own. It's got a bullish context. I've still got the confluence I need. So even if I planned it a week ago, everything's still fine. But with GMX, it wasn't. So I adapted. So I would leave the trade and pass on it if the context changed. But it hasn't, which is the only reason why I'm staying in it. So, and how much into profit? Well, that will depend Yeah, well, it depends. Again, I have my trading plan, but if I see the market turning, I see Bitcoin doing something, I'm not going to wait for my take profit. I'll just exit whatever I can get. Simple as that. I'm not going to wait around to lose all those profits. But yeah, be adaptable, but adaptable with a plan. Don't just make it up. Be adaptable on paper, right? But thanks for that question, Robert. Thank you so much. It's a pleasure to have you. But I think that's it, right? I think we've used up our time.
All good.
Thanks, Paul.
Thanks, man. Good luck, everybody, with the snooze event coming out if you're trading.
Good to see you, Howard. Take care. Thanks, Paul. Take care.
All the best, guys.
Bye-bye.
Bye, everybody.
Hey man, hello, Coach Yanni. How are you doing?
I'm good, man. How are you?
I'm good. What you think about this price action?
Of today?
Yeah,
Yeah, I think it's pretty kind of. I think it's almost like expected because of the FOMC coming out. But if you look at the daily time frame, I'm not sure if do you look at the daily time frame or not?
yeah. I checked the daily area.
Hey, Michael.
Michael.
Hey, Yanni. What's
Michael.
up, man?
How are you, Michael? Good.
Yeah, you good?
I'm great. What about you guys?
Good.
Always good, man. Like you
Yes.
know that default response.
Sir.
Great, thanks. No point saying anything else apart from the fact that I got smoked last night on gold. Oh, I'll tell you.
Gold.
Oh man.
Well, I'll show you that in a moment. Let me just quickly show you the NASDAQ. You see, this is the 200 EMA, right? We broke above it, and then this candle kind of really struggled. It just didn't want to like follow through and carry on to that resistance, and then we dropped below the 200, and now today we traded above it, and now we're below it. So this, when you're at this level on the daily time frame, you can expect pretty similar behavior on the shorter time frames, right? Really difficult kind of. But I don't know, Eamon, maybe like you got a few good ones based on your athlete's foot charts. Right, but yeah, for me, like because of that, and also the fact that there's FOMC, I'm just standing back. I'm standing back. I'm a bit nervous. Look at these cool people. Robert, always great to see you, my friend. And there goes Rhythming again. With this connection issues. All right. Yeah, so we're going to see what happens in an hour from now when FOMC comes out. I really don't know what to expect. But I want to share with you two opportunities that I think is really good. And the first one is gold.
Okay.
And you can see we're forming this ascending triangle here. We got that little shakeout yesterday. That's when I got smoked. I'll show you that in a moment. It's forming that ascending triangle. If we can break out of this 3398 level, I think that's a good opportunity. The second one is on the Aussie Swiss. The Aussie Swiss is now forming this very strong rejection candle, and that's a very, very strong retest. Like if I zoom out here, do you see that? Right, so it was breaking. Oh, that's the support level. It broke through, and now it's retesting it. This is the weekly time frame, and on the daily, it's rejecting beautifully. So I just want to get FOMC out of the way, and I think this is this will make for a really nice swing trade all the way to very close to the bottom at least. So those are the two opportunities.
Nice.
All right. So anyway,
Nice.
let me show you where I got smoked. This is where I got. This is where I got in. Right. You see this sideways consolidation, and then just as we pierce through there, let me just zoom in so you can see that all properly. Okay, right there. That's where I entered. And my stop loss is like, because we closed above that resistance there, that candle, and the next one followed through. So my stop loss was just over here. So I was in profit really nicely, but I expected after 3,450, I think. So it was pretty close. And then then it was the New York close. Now with gold, there's usually like there's an hour that the market is closed. You can't trade for an hour.
Hour delay. Yeah.
Yeah, it's just closed. You can't do anything. And then the new candle started, and doop.
Wow.
Like, they hurt, especially when you profit so much. And I didn't expect that. That's not typical behavior. But it could be just a kind of a bit of a shakeout. But right now, I think we are busy forming that really nice triangle with higher lows and with that resistance here. Now, this setup here is very similar to the pound US dollar, right? If you look on the pound US dollar, the 15-minute time frame, see that sell-off, and then you had a range, and then you broke out of the range, right? So that's pretty much exactly what gold is looking like right now. Okay, so we'll see what happens when it gets to that resistance. Is it going to reject and form a higher low and then push through? That would be great. Yeah, but so I just want to like on the pound US dollar, just my take on the pound US dollar. There was an opportunity this morning to go long. I didn't take it. I just wasn't interested in the pound US dollar. I'm not at the moment. I'll explain why. But you see, this red line, this resistance level here, is actually a Fibonacci retracement level. So I was. Do I have another one? No, I don't. So let me just put it here so I can just take you through everything here. You see, that was the FIB levels I had on, okay? That was the 38.2. So that's where that level came from. This was NFP. And I always say, yeah, it was NFP. Like yesterday I said FOMC, and I said it like 4 times, and it wasn't FOMC, it was NFP. But anyway, that was that candle, and we struggled there. You see that? So we bounced up there several times. And then we broke through, and my level of interest was the 61.8. But we didn't find resistance there. It just pierced through the 61.8. So that means that this trade is dead. The short opportunity is dead, right? From that point, it would have made sense to look for a pullback, which is what you got here, right? There, it pulled back. This was overnight. This was a couple of hours after the London session opened. So there would have been a really good opportunity to take a long. But again, I didn't take that. Okay, so where are we right now with the pound US dollar? We are in the middle of the range. If I zoom out here and you look at a potential, or what can you see here? Well, first of all, obviously we're in a range. We went like full cycle from the bottom to the top and again. But now this where we are right now, we're basically right in the middle of the range. This is for me anyway, this is the worst place to make any decisions. So I want to see like what FOMC is going to do. Is it going to form some sort of triple top and break lower? Or is it just going to break out higher, test that resistance, come back low, and then go higher? I don't know, right? I really want this FOMC to be out of the way.
Same here. Yeah. This got my EU trade all messed up.
It's yeah, I'll tell you what. I mean, I was in good shape until that damn gold trade just kind of like went boom, like because on the pound US dollar, I was like, I caught that really nice short trade, but from when we're in this level, you have to kind of wait to get clarity. Yeah, but right now I'm just like, there's so many different scenarios and I don't like it. Okay, like if you had to narrow it down to just 2 scenarios, well, it's going to break the low, it's going to break the high. That's so. But from this point, I don't think it's a good idea to guess what it's going to do right now. So FOMC is a big one, but the other one that's also big is tomorrow on the pound US dollar. We have another news event tomorrow on the and that's on the pound US dollar, right? That is.
What is
the
that?
official bank rate. The previous is 4.5. Yeah, 4.5%. The forecast is 4.25%. So if the actual is 4.25%, I don't know what to expect. But if it's unchanged, if there's like a surprise coming out, that's going to send the pound US dollar lower, way lower. So right now, I think the best thing to do is to sit on your hands and do nada, do nothing.
Yes.
Just like get that out of the way. Yeah. So yeah, that's the pound US dollar. But I did show this yesterday. Eamon, maybe you can explain since you've paid attention. What did I say here? No, I'm just joking. I'm just joking. All right. So we have a very strong, this is a very strong monthly candle, right? Now, if we get that wick, I just want to show you that level that I've identified on the 4-hour, right? Will be, you see, it will be around here. So it's not kind of completely unrealistic. It's just like, I would have liked to get a very sharp pullback, forming a really nice deep lower wick before it pushes through. Right, pretty similar to the previous month. That's what we got the previous month. We got that very sharp pullback, and then the move to the upside. That's just that just makes for a beautiful opportunity, but it doesn't mean we're gonna get it. So you kind of just have to focus on the 4-hour time frame and time your entry. Yeah. So And the dollar index is still kind of doing that. It's still on that support level. I think FOMC will change this, either to the upside or lower. Your guess is as good as mine. We don't know what to expect, but it's coming out in the session, so it'll be interesting to see. It will be interesting to see what happens. So stay tuned if you're watching. We're gonna do all sorts of. We're gonna go full margin.
Yanni will trade FOMC, so stay tuned.
Yeah. Yes. 500 leverage.
5 minutes.
5 minutes before the news release. Yeah. So anyway, enough said about the pound US dollar. Bitcoin, I see, has had a push up today, but this is a pretty messy situation, right? This is not a clear. This is definitely not something I'm interested in, even on the longer time frames, right? I mean, obviously it looks like it's pushing higher. I just don't like it. It's not lining up very nicely, and we can still see this coming down. I don't know if it just pushes higher, then this level that I've got here, this 99,300 level, that's the next resistance area right here. You can see it clearly on the 4-hour time frame right there. So yeah, on Bitcoin, this I've just been. I mean, this was the last trade I took from that bottom up here, and then I took a short from there that didn't work, and that was it. Only the 2 trades in nearly a month on Bitcoin for me. So there's just nothing lining up for me right now. So that's it from me for now. Over to any one of you fine gentlemen.
Yeah, let me show my NQ trades today. What I was looking for. Can you see the screen?
No, I haven't shared it yet.
Yeah, now?
Still, yeah, no, it's coming through.
Yeah, okay. So, as I mentioned yesterday, we are still sitting on this daily demand. So we had this big push here on, like, let's say the 2nd of May. We rejected this supply here on the daily, and now, like, let's say we got, I think yesterday night we had some news. We had some big push to the upside, testing the supplies in the 20,000 level, and then we rejecting it. On the 4-hour, we were still ranging between 19,700 and 20,200 approximately. So as I expected, and as I mentioned yesterday, I was expecting a choppy price action, at least at the open. And if let's show my intraday level, what I was waiting for, and one trade I missed. So let's show. So first we had this daily demand that I showed. We had here 1-hour demand also. So we pushed before the opening. We pushed like I don't know how many points. So yeah, 50 points, and then we created the support right here. So we took the low one time, we took the low second time, and then we broke the supply. So the first thing, where is it? 5 minutes. Yeah. So the first trade that I missed, it's the sell from here. It happens so quick. I try to sell again from here and stop loss above, but I can show the footprint. I went like small, let's say small loss, close on a small loss. So this is the 15 minutes. So where is it? Let's switch to the 5 minute to show more details. So this is the supply here. The supply, yeah, here. So the supply was around here, and I was waiting like for to sell from here, but you can see that on one candle we went like like we had I think at least 50 points in this move right here, and I tried to short right here, but I closed the trade like in a small loss. Just I saw like some buyers here are entering aggressive, and also the momentum like was bullish in this move. So second trade I took based on this cluster right here. So when I close this trade, waits I think 5 to 10 minutes, and then I saw like this candle right here, took this previous week, closed green, and on the footprints it looks also nice. We had some big cluster at the top, so waited for a little bit for a small retracement and trade the break. It was just small scalp of 15, 18 points. So something not from the low, but it was something from here. So yeah, and then my A plus setup was selling from this 1 hour supply, and as you can see, we missed it with, I don't know, I was a little bit mad. Yeah, 3 points, 3 points. So I was waiting for this unmitigated supply. We never touch it. So I was waiting here like for the price to come, give us some like the same what we had here. Just like I want the NQ to touch this level, this supply here before getting this push to the downside. And also the direction for me for the day was mixed, because I know it's FOMC. So I didn't have, let's say the way I start the session, I said there is 70% chance that we will stay between 2 points, A and B. So I was more, let's say, reacting to the price, but not let's say not having bigger targets. For example, here just target the highs, because like in this type of days, and especially when I saw these 2 candles here, like I knew like there will be a lot of stop hands today because of pre-FOMC. So you can see here on the shape of and how the candles looks like. We took this previous week, close green, and we took again both of them, and we took again all 3 of them and come back. So it was like from the open, it was more, let's say, looking like it's gonna be a little bit tough to trade. Yeah, missed this trade. It was really nice. It had same pattern. We took this previous week, close red, but we didn't touch the level. I didn't want to chase the price, because there is so many times that we get a retracement, and I think Yanni mentioned it yesterday. We got a retracement before the level or before the break, and then maybe we come back, retest it again, or break it. So
Right.
so I was waiting, let's say, for, okay, this is just a retracement before the touching the level, and then we will come to the level. But the sellers were aggressive, and as you can see, and I saw this live, but I didn't want to jump. I really saw it. So this is 5-minute delta. I saw like from the top right here, we have some big clusters, green, when we are respecting them. Here we had some big cluster and we are pushing. So here we start to struggle, and we had like some big cluster at the low of the candle, and straight continuation here, straight continuation. So yeah, but missed this one. It was really good one. What now I am looking for, to be honest, is I am more like what I want to see. Let's say I want to see like those lows here got taken, test this daily demand, maybe come to this 19,500 and 19,352. I would like to see the price, how the price and the delta will looks right here to buy. We still didn't, in my opinion, like we didn't take like the high of the candle of previous week. It could be the low here. It could be become, as I said, there is a demand right here. We could create a low here and then take those highs. And about the sentiment, there is a lot of news lately about China coming to the table with the US. So I think that's why one of the reasons we saw gold like this push to the downside. So there is a lot of, let's say, talk about China already got a hit with the tariff, and now they are coming. now they are starts coming to the table. So if it's true, like we could see, like on the weekly candle, we will create the low maybe after FOMC or before FOMC. We create the low here and then break higher. It's possible. The second scenario is coming, let's say, just straight. There is momentum coming and like taking even this demand right here and then a pullback. But I am more in favor to creating the low of the week on this area right here and come back, take off this last week high. So this is what I want to see. But as you know, the market always does what something.
Yeah, the market doesn't care if you're a good person or if you're a family man or it doesn't.
If you donate to the homeless, it doesn't care about none of that.
It doesn't care about any of that. It will destroy you.
Yeah. So yeah, just one last thing is like, it's for me like it looks more that at least we're gonna take this low. But again, everything could happen. Why I want to see those low get taken? Like you can see this supply, 4-hour supply is getting respected, and even if we see the candlestick behavior, like you can see this big push to the upside, and then we struggled even to just take this high of this candle. So and then we came back lower. If we check just the volume. So the volume here slow down a little bit. Now we are seeing increase of volume. And you can see again here, we took this previous week, come back, close red. So what I want to see like in this 4-hour, to be honest, so it confirmed my idea of taking those low and go into this demand right here is at least I want this 4-hour to close below this week, this 4-hour week. So because if it's close inside, we could create a support and maybe still range more here. So yeah, so that's it for the NQ. Yeah, maybe if I can show just one last thing just about the delta, some interesting, let's say, pattern happened today. If it's okay, Michael.
Yeah. I was actually gonna say, if you guys don't mind, just go ahead because I got someone here. He's doing something in my office and I gotta press mute. So I would much rather him be done before I start presenting, because next thing you know, you'll hear. So yeah,
sure.
Have at it for like this.
I think I'm going to take a little trade here. So let me just show you my screen. We'll see if it works. All right, so I just took a long here because it's you see that's the support level. It looks like it broke through and now it's reversing. The 15-minute and the half an hour and the 1 hour is bullish. So typically I don't trade this time of the day, but it's lining up, so I'm taking it. So let's see how this one works. This is just on a simulated account. I'm done for the day. So let's see how this one trades. But this is typically what I would wait for, right? I would just want everything to line up, or not everything, just 2 out of the 3 time frames, and then I'll just look at smaller time frames, support, resistance, very basic, okay? And the VWAP as well. The VWAP, 1 standard deviation, 2 standard VWAP. VWAP. So the take profit is below the VWAP midline and also below that resistance area. So far so good. Let's see if we can get this one. Come on. Okay, I like to motivate my trades. You know, I've got the little pom poms and everything.
Yeah, I'm sure that helps out with the price action.
So the bracket order is actually it's 100 tick take profit and an 80 tick stop loss. So it's a 1 to 1.2. It's not 100, it's 180. 100 take profit, 80 stop loss. So who did I interrupt as usual? Probably you, Eamon. You're busy talking.
Like always. Yeah. All right.
Trade come first. It's okay.
Yeah. So this one, it's a bit slow now, and we've got FOMC is still a while away.
So normally you don't move break even, or
no? I'll reduce the stop loss, but I will never break even because it's too. See, I'll go to the low there, so I slightly reduce the stop loss, but not break even. Because I'm like, it depends on how you scalp. Some people like to scalp just 5 points, or even smaller, and then they're pretty aggressive. It's really, really short term. 100 ticks is pretty wide. But I prefer that because you just have more room. You just have more room for the trade to kind of go against you, and it's still the risk reward ratio is 1 to 1.2. Oh, come on, Nazi, we've got people watching. Get on with it.
Come on, Nazi.
It's a bit slow.
And like you check also the ATR to put your stop, or it's fixed 100 tick?
No, it's fixed. It's fixed. I mean, during the summer months, I'll reduce it because then it's very slow. Like if the ATR is like 4, then I'll reduce it and increase the trade size. But then other times during, say, what's that? With the tariff announcement, I couldn't trade. It was just the ATR was just way too big.
Yeah.
Like even on one micro, it was just too big.
Wow. One micro, like it was like 100 points, so 400.
Yeah. There was.
Yeah.
I saw 150 point ATR at one point. 150.
Yeah.
That is insane. Like and like the size of a 1 minute candle was like the size of a 4-hour candle. It was just crazy. Like so. Yeah, I was out I couldn't trade for. I can't remember how long it was. Like a week, maybe longer. All right, ladies and gentlemen, be patient. Watch this trade as it go all the way to take profit.
Right.
It's
just need a little bit of motivation. That's all.
Yeah, like with the school athletics. All right, it's pushing higher. Right. So yeah, it's just like we've 3 minutes, and then I see on the half an hour you can see that you've got that resistance. I'm not sure if you can see that clearly.
Blue.
Yeah, let me zoom in like that. So, yeah, that level there. So from there, I definitely won't take any shorts. So I do look at the levels on, you see the 15 minute and a half now and the 1 hour. And if I see an opportunity to go long, but we're right at the resistance level, then I won't take it because you like at the resistance level, it can just like pierce through and reverse or whatever. All right, how long have I been doing this trade for? 2, 4, 6 minutes.
That's it.
Ayman, you want to sing us a song while we wait?
Yeah, of course.
But anyway, but this is basically my rinse and repeat kind of scalping strategy on NASDAQ. It works pretty well.
Yeah. And do you think like it's working more better and efficient, like when there is more that's when like at the NY session open, like this first 1 hour 30 minutes, it's working more better?
Much better? Yes, just not the first 15 minutes. The first 15 minutes is usually a bit like it looks like it's going to break in one direction and then it just reverses and does the opposite. So, but that's just like it, usually, but other times it can open and then there's just a strong push in one direction, right? So when that's the case, I miss those. But if you just wait, sometimes you have to wait 45 minutes, and then you'll get an entry.
Right. What is? I ask you too many questions, Lovett. What is like your favorite ATR? Like let's say when you see on the 1 minute, it's 10, 12.
Yeah.
like around that range, I say between 8 and 15. I know it's a bit wide, but I say between 8 and 15.
Mm-hmm.
Yeah. I thought you were going to ask me what's my favorite ice cream. Well, then you went for ATR. All right, like we're moving higher.
Sweet.
It's been a bit quiet, 2, 4, 6 candles, but yeah. But this is on a sim account. I don't really care about the outcome. I just wanted to demonstrate
What it would
exactly
look like.
what the set. Yeah, this is exactly
Right.
the setup I would take.
Well, while
But
he's
I don't-
let me get the screen really quick while he's out.
yeah,
Right.
yeah, sure.
He need to come back and finish the other side, it looks like. But I actually took a trade today on NAS 100 myself, guys.
Nice.
Yeah.
Welcome.
Yeah.
Yeah,
So
welcome to the
team.
Nazi Club.
So sweet. This is where I was today. I'm sure you guys can already see why, right? We got our infamous M top here, right? Then we got the break that does not touch the 200, come back and retest this 50. I was expecting this to drop down here, right? Which of course that didn't happen. We had too much going on. It's like they're holding this level because of the because of this news that's coming out here shortly. But I did go short literally right here. My stops was a bit high. I was trying to be safe, right? So I put it all the way up here to go above this swing high here. And sure enough, it closed, came down a little bit, broke this low. And I didn't even have time to move my stops to break even because I was a little bit busy. Take anything off because I was a little bit busy today. So I literally just moved my stops to break even, and this thing came right back and took me out of break even. So I didn't even make any money off this setup today, which is why I'm like, I should have known that I wasn't gonna make anything off this because they always end up swinging back. Now, something I could have did, which I wouldn't do, to be totally honest, is go for the riskier setup, which would be putting my stops above here, right? This is a risky stop loss area, and this is the accurate stop loss area, right? So not only did I take this and it worked and it set up pretty decently. The only thing that I didn't really like about this is the fact that right in here, you can see we got this 1350 to cross back up to the upside. But when I seen this candle close here, this was fine. So I was, fine taking it. I knew that we had that bigger news coming out today, so I didn't put my full position on it anyway. It was only a half, but I put a half on NAS 100, which came back and took me on a break even, and I put a half on S&P 500, which came back and took me on a break even too. So I didn't make any money off either one of these setups today. But as you guys can see, they were pretty much the same exact setup, right? We got that funny M top, run down, come back to this area to retest the 50. Funny little M structure here. I was expecting this drop towards the 200, which never happened. So not too much on these indices today, but I do like to take them when they set up crystal clear like this, right? And then on top of both of these, I even had my 4-hour confirmation, right? So I took this trade here on this candle, and as you can see, the price is below this 13 EMA, right? Oh, I'm sorry, not this one. We took it over here. So price is still below the 13 EMA on this green candle, which is good. So we got the 4-hour confirmation with it too. And that was the setup on, that was the case on NAS 100 as well. We also had the 4-hour confirmation here, right? So if we took this here, and I'll make this red. You guys know I like to make everything congruent. Make sure I'm not confusing myself or anybody else. But yeah, we had, as you can see, also on this candle, price was below the 13 already on the 4-hour chart. So it had everything it needed. We had the 4-hour confirmation. We had the funny M top. We had the 1350 cross. We had the run. We had the first pullback to the 50, close below the 13, short, right? Even price on the TDI agreed. we had this area where price just went below the market baseline, went below the static line, and we had this little structure here, right, to go short. So it had everything it needed, but it just never manifested. This thing literally took me out at break even shortly after, like 2 hours later. So that was my setup on NAS 100 and S&P 500. I was also looking at Euro GBP, which was super close, but this didn't really give me everything I needed to. I wanted this to close here for this actual second position. You can't take this first one because this is ugly, like really ugly, for the simple fact that if you look at this, you can see that on my TDI, this kind of went outside the band here. So I'm looking for it to kind of do something like this and then go down on the TDI. Right. So
Michael,
this
if
never
I
really
can
came down. I really want to see it.
If I can show quickly and get back to you just before I go to break even.
Yeah.
If it's okay.
Of course.
Sorry to interrupt you.
Of course. No problem. Trades first.
Mr. Yanni, could you please confirm? Yeah.
Yep.
So I took a sell right here after. Let me show. So normally here break even, I would say it's just because we this candle here, it took this previous week, close green, got continuation. So I draw this blue line just to move to break even, but let me explain just the trade first. So as I said, when I was explaining, I am looking, what I want to see is taking those lows right here. So this is the idea. Second thing is, I said it's also like the 4 hour is pushing. We took this previous week, close red. And what I want to see is this 4 hour close below this to get this break. So when we check the 30 minutes, so we have this big push, and then we create sort of resistance right here. 15 minutes delta. So 15 minutes delta. So we had a lot of imbalance right here, and we got some big clusters. Price respect them. We pushed up. We got again some big clusters right here. Price push. The price couldn't push. Like buyers were starting to get absorbed. If I go to the 5 minutes. Oops, yeah. So the 5 minutes, we got this 102 clusters, and some sellers start to enter. The delta also, you can see that we were green, and then we start to be red, just small, like minus 26, here 288, big volume, and then we got like the delta shift from really positive to really negative. So minus 167, 207. And because like the context, what I want to see is the break of those lows, I waited for this 5 minute candle. I entered late, to be honest. Like we took this previous week, close green, red, you can see here. Took this previous week, closed red, came back, and then I took a sell from here. And break even here. Why break even there? Because for me, it's a demand area. I am expecting this demand not to hold, but we took this previous week here and come back close green, and we got continuation. So it's still a demand. We will see how the price will react. But so that was the trade. Sorry for the interruption. Yeah, interruption.
It's
sorry,
interaction.
Interaction.
We have a couple of questions there. I don't know if we maybe hi L, candlestick patterns and charts. I'm not sure if there was a question. And the other one was Andre saying a Powell coming conservative today could see the DXY rally in the short term and the pound US dollar correcting to 1.31. That's exactly what I hope for. I really want the pound US dollar to go down so we can get a very, very nice, it's almost like what do you call those things?
Yeah.
Like what do you call those things, Michael? Like
What?
you drag it and then you
Bow and
shoot.
arrow? A bow and arrow?
No. The other one. It's like it's got like a V shape, and you hold it on the stem thingy.
You talking about
V-shape.
a slingshot?
Slingshot.
Slingshot. Yeah.
That's what it is. Like if it drops really far, it's like a slingshot. It drops like to a nice low level, and then that's what I would like to see, Andre. But that doesn't mean that's what's going to happen. But yeah, I would love that to happen. But we'll see what happens. Sorry, Michael. I think that was all the questions for now.
No, it's all fine. Let me get back to it. So yeah, I was on EG, which really didn't get to where I wanted it to. As you can see, it's actually going the other way around, more than anything. But my trade of the week that I'm still waiting to set up, I've been super patient on this since Monday, guys. It's on EU. On EU. I'm wanting this to set up because on the 4-hour chart, I'm going to take this on the 1, but I'm looking for 4-hour confirmation. But on my 4-hour chart, this is looking absolutely gorgeous. Gorgeous, gorgeous, gorgeous. Right? Now we have this beautiful, and I love this. Keep in mind, this is my A+ setup. When this happens on the 4-hour chart, and then I have the M or W off the 200 off on the 1-hour chart, it tends to really work out. So this is why I'm so waiting for this to happen, because this is gonna be my trade of the week if it does. All right, we got this beautiful M structure trying to set up. And I just want to see this bad boy just drop on down. This will give me a nice 2-for-1. And if you look at this on the 1-hour chart, you can see it's starting to make that beautiful M structure as well. Just gorgeous, 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 gorgeous. You know, as soon as we get the 5,200 cross, we're looking for that M structure off the 200. This doesn't count because the market baseline is still below the static. And this doesn't count either because this is just not it. This is at like 11, this in the morning or at night? Oh, this is 11 in the morning. This doesn't count either. This is nothing. This is, once you got this leg that's higher than this first one, this cancels out. So this is the new first leg. So this doesn't matter. What I'm looking at is this right here. And if you look at this, this comes right to the pip on both of these tops, right? So we got this nice double top, first leg, second leg. I'm really just waiting for this to close below. I would want it to close down here somewhere, to be honest. Like I want it to close below this area, right? Like let's say like right here, because I want it to close below the 50 and below this little resistance area over here. All of that I want to close below. And as soon as it does, as long as it's in my session time, I'm going to take this trade. And this is going to be a banger, right? TP can be all the way down here, almost a 3-for-1 on the 1-hour chart, guys. Almost.
Nice.
Almost. So this is really what I'm waiting to set up. Just beautiful. And then if you look at the TDI here as well, we got a nice outside the band here. So we know that's where you want to push your stop above this point here. Next up, we got inside the band, and we got the market baseline doing its magic with this reload, right? We just want to see it do that. That'll give us the reload, and oh my, I'm gonna smack this trade when it sets up. Seriously.
You are ready,
Nice.
Michael? Are you
Yeah.
ready to hold like for the night and for a couple of days?
You're
Are
damn
you
right.
prepared mentally?
This setup, yes, I'm gonna hold this one. I'm holding this one because I know I can't say for a fact, but as soon as it gets down here, like like around this level, I'm moving my stops to break even anyway. So as soon as I'm get to break even, I have no risk on the table. I'm not really worried about it. But man, this is gonna be a nice one if it sets up. And I'm saying that because obviously you can see this. This is almost a Mona Lisa, guys, like crystal clear textbook trade. But not only do we have the setup on the 1-hour chart, that's a beautiful M off the 200, as I mentioned on the 4-hour chart, this is gorgeous too, right? This is actually my highest probability setup, which I call the master trade. right? So it's right after the peak. All right, we got this peak over here. Well, peak highs over there. But once we get this cross here and price runs down like this, but does not touch this 200, that first pullback to this 50 is it. I just want to see something just like this. And I'm all over this trade. I mean, all over it. There's a 0% chance I will miss this. 0.
All right.
So much so, guys, like literally yesterday, I thought this was going to set up. I set me an alarm because I'm looking for the 4-hour close, right? So I set me an alarm for 1 in the morning, and I set me an alarm for 5 in the morning because I didn't want to miss this, right? Even though I got my alert, I can sleep through this alert. It's just an email, right?
What time is it? What time is it where you are now, Michael? Just
it is 1:45
p.m.
Yeah, p.m.
Of course, p.m. Not in the morning. Sorry, yeah, of course. Okay,
Yeah.
no, I just wanted to ask.
Yeah. So I set it for in the morning, 1 in the morning and 5 in the morning to make sure I didn't miss this setup. As soon as I looked at my, I got my iPad next to the bed and I already had the chart up. So I looked at it, glanced, I seen it was still high. I'm like, all right. The second alarm came in, I seen it was still high. I'm like, all right, I'm good to go. So yeah, I'm just waiting on this bad boy to go ahead and confirm. And yeah,
that will be
nice. This is literally gonna be super nice once it sets up. So yeah.
All right.
That's what I'm waiting on. But in that, I don't really have too much action.
Sorry, Robert. Robert had a question. He says, "I have a question. I'm trying to work on my trading issues, as Michael would say. I'm tired. I guess you mean tired. Tired of not following the rules again for the millionth time. What's the question here, Robert? So I'm going to spend the rest of the month doing my normal trading and opening the same position on a sim account and leave the trade in and trusting the trade. Okay. For instance, I took a 10 micro short on NASDAQ and took profit. Okay. Came really close to my target and pulled out at 19.836 when it looked like the move was over. Now that I looked, damn, Robert, you write essays, brother. Now that I looked, I would not. Now that I looked, I would not have hit my TP if I stayed in, and my sim account would have to come back to up to stop loss in. Okay, but I want to hear how you guys navigate staying in or pulling out.
Yanni, you're hilarious.
Damn, this is not a relationship channel.
Yeah.
I have a meeting, so I'll check back to see you answered my question. Yeah. I mean, it's all different. I mean, every single trade is unique. Like, how do we know when to stay in or not? I mean, for me, I have I look at where price can realistically go, and then I take profit not way before, but before that level. So say, for example, I can see it can very easily go to a previous high. I don't target the previous high. I go lower, right, to increase the probability for it to actually hit that target. But I mean, I'm not really sure. I mean, if it's the NASDAQ and you're scalping, maybe you try to, I mean, which time frames are you focusing on? Is it a swing trade? I don't know. Difficult to answer that question with the information you gave me, Robert. Do you guys have something to add to that?
I mean, I would say the rules, right? Like, it's only difficult because you're deviating from the rules. Like, for me, when I get into the trade, right, like it's a close above or below the 13. As long as everything adds up, that's my entry, right? As long as the TDI agrees with it. Now, to get out the trade, right, it's the same thing, but the opposite. If I'm going short and my price has closed below the 13 and everything is confirmed, I'm in the trade. I will stay in the trade until 3:55 p.m. comes around and I need to close it, or 2, price has turned back around and closed back above the 13 EMA and I'm closing it. So for me, it's not really it's not a look. It looked like it did this. No, it clearly closed back above the 13, so I have to get out of it. Or it clearly closed below it, I have to get out of it. So it's all about sticking to those rules, which, to be honest, is one of the most difficult parts. But once you do that, you don't really have to worry about staying in or staying out or anything. That's not a question. You're following your rules. Because I tell you this, if you're trying to decide what you're going to do inside while you're in the trade, that's the wrong time to be trying to ask yourself that question. Because you're not thinking clearly, as we talked about, Yenny, right? Like your frontal lobe, you're not making proper decisions, right? It's just your brain is in fight or flight mode. So you don't know what to do. Your brain's trying to tell you to close the trade so you can get rid of this fight mode that you're in. You got to come up with all of that before you get in the trade, right? I know when I'm going to get in before I enter. I know I'm going to get out before I enter, right? And while I'm in it, if that happens, then I'm just going to follow my plan. But all of this is predetermined before you enter the trade, not after. Because I guarantee you're not thinking the same.
Yeah, because I mean, Robert, your first message was, I'm trying to work on my trading issues. I'm tired of not following the rules again for the millionth time. Yeah, I think we've addressed this a few times now. I just would like to know, what have you tried so far of the things that we've recommended? Have you tried any of those can we call it strategies or those ideas? To address those issues? Have you tried any of them? Be interesting to hear what you've tried and how it went with that. All right, the NFP, NFP,
FOMC,
higher lows, lower highs, FOMC, NFP, support, resistance. I always get those confused.
ABC, elemental.
Yeah.
I will explain just quickly why I
look, here we go. We got some movement on this NAS 100. This thing about to kick up.
There's just anticipation of the FOMC, I'm pretty sure.
Yeah, so it was a scalp. So when I saw this big clusters, red clusters, now we broke it. So I saw those big clusters in -94, -77, and when we open up, it was pushing strong, so I get out. And as I said, we were sitting on this demand right here. We don't know if we will respect it. I'm expecting to break those lows, break even this low, but we will see. We will see live how the price will react to FOMC, and most of the time is after, let's say, at I think 8:30 my time, so it's 2:30. So after the meeting, at 2:30. So let's see.
Yeah, we'll see what happens, ladies and gentlemen. It's exciting. I'm actually a bit excited because I'm hopeful. I'm hoping it's gonna drop. I hope the pound US dollar is gonna drop. If it just pierces through, I'm like, oh, maybe nothing happens, right? It could just be spiky, like a bit up, bit down, and then just nothing. That's what happens with. That's what happened with NFP anyway. It just kind of did nothing, but up, but down. On the 4-hour chart, like on the smaller time frames, it looked like, oh wow, it's moving up. But if you kind of look at the time frames that really matter, the 4-hour, it just did nothing. So we'll see what happens. Do you guys look at Ayman, what do you trade? Do you only scalp? Is that all you trade, or do you only trade the NASDAQ, or are there other trades that you also kind of have a stab at?
Sometimes gold, but not much. But mostly NASDAQ, because the way I trade NASDAQ, for me there is enough opportunities daily. So scalping or sometimes intraday, so there is enough. So I focus mostly on NQ.
Michael, do you scalp the NASDAQ, or do you? Well, same question really, or do you mainly just focus on that setup of yours on Forex, or do you like now and then do a bit of scalping as well?
No, I'll look at all of them. I look at everything. As long as it's one of those 5 setups I have occur on anything, NAS, S&P, US 30, gold, Bitcoin, and all the Forex pairs. I don't even care what it is. I will take it.
Yeah, look, you see, I like swing trading, but I do scalping just to kind of please my addiction, my trade. Take a couple of trades there. It's like, yeah. But I do enjoy both. But I like I honestly feel like the money is really made on the, if you can, but they don't happen very often. You know, like when you get a really good scalping, not scalping, like a swing trade, you have to often wait quite a while for something decent to set up. That's the only thing. So it's either that or online gambling, brothers, and I'm not doing that. I'm not doing that. All right, like, can you see any like pre? Oh yeah, I think the NASDAQ is moving lower.
Yeah.
Still,
And-
we'll see
and
what
the-
happens. What's
So
your expect? What do you expect, Ayman? Do you think it's gonna drop the NASDAQ?
Yeah, yeah, that's what I say. Yeah. I'm expecting it's gonna drop, but everything is possible. So I'm expecting, just from what I am seeing now, I'm expecting from here, I'm expecting the drop. Yesterday also, I was expecting the drop in the FOMC, but yeah, we could drop, come here, break this and go lower, or we could get the drop before let's say before 2:30, before the meeting, and then come back like the reversal. Everything is on the table, but yeah.
Well, ladies and gentlemen, I'll be watching the pound, US dollar, and gold. What are you watching? What are you looking at, Michael? Are you just going to have a look
I'm looking at this
like...
EU setup.
Oh yeah, of course.
Yeah, absolutely. This thing needs to set up so I can it's about to make my whole week, maybe next week.
All right, Robert, you said 1 or 2 days of not over trading and a few days stopping when I hit my max loss, but sadly I did it again on Monday, lost control, and yeah, sadly I had to say goodbye to your account. I justified it in my mind because of the free renewal coming tomorrow. Yeah, you see. Yeah. I still think you are. I still think you are attached to the outcome, but you're not focused. What's your process, by the way? Do you understand exactly what are you trading anywhere? I think you're trading NASDAQ, right? I can't remember, Robert.
I think all indices or more NASDAQ.
Okay. Yeah, and Ayman, you also like swing trade, not swing trade, sorry, intraday trade the NASDAQ, right?
Yeah.
Yeah, I'm also into swinging when it comes to the day trading. I mean, long-term time frames. Yeah, mostly NAS. Yeah.
Yeah. I think like for most of, not most, but a lot of traders, like they start the week, let's say, with motivations, and in the middle of the week they have a lost Monday, lost Tuesday, so and then let's say they lose, let's say, their motivation. So that's why
look,
I
you shouldn't
say,
be motivated, right? Like,
no,
it's a job. Trading is a job, and it's a tough job. Like, there's no motivation there. You just gonna need to, like, I mean, you never heard of an electrician spending the weekend getting motivated to change the fuses. It's just a job, right? Like, so I'm just saying, like, I understand what you mean. Like, but if you, I just feel like if you go down that if you go into that direction of motivation and all of that, motivated for what? To make money? Your mindset is not right then. You shouldn't be thinking about making money. The money is like a byproduct of the job you're doing. Yeah.
This is the thing. You have to twist your mind, because let's be honest, we all start trading to make money. So just to make it clear, we all start trading to make money. The only difference is you have to twist and enjoy the process, twist your mind and find something that you enjoy into trading. So let's say you don't focus much on the outcome, and when you focus, let's say, on this process of learning and adjusting, the strategy, learning, self-development, learn more about yourself, and then, as Yanni said, that money comes by default. But to be honest, like everyone, if you ask anyone, we start trading because of money. Just the only difference is you should not focus on money. So it's a little bit. It's a little bit.
There we go. NFP came out, and there's nothing happening right now. Sorry to interrupt.
NFP.
Oh God, I always get it wrong. FOMC. FOMC. And I've got my money on a horse. That's wow, this is dead.
What's gold is doing?
Nothing.
Okay. US interest rate decision, actual 4.5, forecast 4.5, previous 4.5. I think Powell will be fired.
Yeah, like wow. Is this quiet or what? What do you make of this, Michael?
This thing is just playing around. Maybe it'll take a few more minutes or something to kick in.
But still, like there is also like 30 minutes. The real moves, if there is a move, of course, it's happened like at like 30 minutes from now, when Mr. Powell will start to talk.
Yeah, they funny for this.
Yeah. All right. Well, that's a bit of an anticlimax. It's like nothing happened.
Agreed.
Okay. Yeah, the press conference. Yeah, we'll see. I don't know.
Yeah, press conference in 30 minutes. Yeah.
Trust the
but
process.
It will be shocking if we rally from here without taking those lows. So let's see.
Yeah, I've said that so many times, and then it happens. I'd be very surprised if it just goes up, and then it just goes up.
Yeah.
Oh yeah. Okay. My friend asked me about trading. Okay, Robert. My friend asked me about trading on if it was BS or not, and all your guys' talks of exactly this come out my mind, and all I could say is, "Stupid me can't get it through my mind." Yeah, look, I mean, like Ayman said, everybody starts to trade to make money. The sad reality is, it's the most expensive thing to take on because you have to invest so much. And it's like the opposite of making money. You are going to pay money, a lot of money, in the beginning,
and a lot of time.
This thing. Yeah, and this thing when people say no, it's don't trade on a demo. It's look, if you can't make money on a demo, you can't make money on a real account. So, but instead of like depositing real money, I think prop firms makes a lot more sense because you can get a small account for really cheap, and then kind of practice on there if you really want to go down the live account route.
Agreed. Because to be honest, the demo account, you don't treat it the same. It's just not taken seriously almost. That's why traders be like, I did a great job on my demo account, but as soon as I went live, I blew my account in like 2 weeks. Yeah. Everybody says they can play basketball. Everyone says that until they get on the basketball court and they're getting dunked on and the ball stolen, their shot blocked. It's like, it's not as easy as it is when you're sitting on your couch watching, is it?
Yeah, it's like when we watch rugby as well. It's like, the couch refs or the couch players, you sit on your couch with a beer. Oh, that guy is rubbish. Take him off. It's like that guy. You'll never get to his level in your life or ever, even in 2 lifetimes.
Same thing with trading. Like,
yeah,
Robert, just coming back to it. Like, I mean, just kind of how Yanni mentioned earlier, I don't know what approach you've been taking lately, but you definitely need to double up on your psychology, man, because it seemed like you might even have some edge already, but the psychology piece is just not there. So again, if you haven't checked out the Trade in the Zone or, One Good Trade, or just, go on YouTube and just start going through some trading psychology or something. Like, they got plenty of videos.
sometimes the issue, it's not, most of the time, in my opinion, it's not the psychology, but it's more of the strategy also, because most of traders, they think they have edge, but the reality is that they don't have edge.
Yeah.
Like there is no edge. So, and it's more tough when you don't discover that it's because of the strategy. You start blaming your psychology, why I didn't exit, why I didn't enter here. But it's more like you don't have an edge. You should slow down, let's say, back test, learn more, get a real edge, and then when you have an edge, and then you start like fixing your psychology and fixing like the psychological barrier that you have. But the first part is, I don't know if you agree, coaches, or not, but the first part is make sure that your edge is working. That's the first part.
Yeah, we spoke about this before. You know, we did mention that trading psychology in many cases is just a scapegoat for issues that lies actually elsewhere, and like you're not actually sure exactly what you're supposed to be doing. What does a good opportunity look like? Like if you're not 100% clear, you should be able to articulate that to someone else. If you can't do that, then maybe you don't fully understand your strategy or what exactly a good setup looks like, right? Because it's a strategy could be something like Michael, but if you look at my approach, I use all the tools I have available. So I'll use Fibonacci levels, I'll use key levels, and I'll use triangles and all of that, but that needs to happen at key levels. So do you understand what I mean? But there always has to be like a premise for the trade or like a catalyst. And the catalyst is usually a strong support resistance level on a longer time frame, usually, right? And then from that level, I'll go into smaller time frames and then look at everything else that I've got available at my disposal. You open your toolbox, take out the screwdriver if there's a screw that needs to be tightened, or whatever tools you need for the situation that you're dealing with.
Right.
So, but you need to understand exactly how you're going to approach it. And then, but if you don't have that, then yeah, like say for example, Robert, you said you don't know, should you stay in the trade or should you get out of the trade? Well, that's your issue right there. You're not sure, right? You're not 100% sure in terms of exactly what you're supposed to be doing. So it's not your trading psychology. You're not clear on exactly what you're supposed to be doing, right? So and now, and if you're in that zone of just confusion and doubt, I mean, that's not a good place to make good decisions. You're going to make
you can't make rational decisions from that point of view. You don't even know what's happening.
No, you just can't. Yeah, exactly. So this is. I wonder if we're going to get anything at 8:30. I hope so. Or 8:30 my local time.
We took out like the lows. So let's see.
Oh, look at gold is pushing up. Gold is pushing up. Can open up gold there.
And Q is pushing down. Like we are getting the break.
Oh wow, yeah, it is.
Yeah. Let's see if we will arrive, because now there is a clean range, or we will come back here and close and then maybe go higher, or like we will see an increase of momentum to the left. There is really clean move here, so we could see similar behavior right here. We could see straights coming to this demand or break it.
That's so lame.
It's
so lame when stuff like this happens, right? Because literally, I shorted NASDAQ 100 and S&P today to go to the 200, and that's exactly where it is now. Like, that's so lame. I can't stand when that happens.
Yeah,
I can't stand that. So they literally held that level just to run on during FOMC. That's crazy. See, that stuff like that. That's sneaky, man. That's so sneaky.
All right, Robert, you say
the way Michael said it, like it hurts, Michael. Huh?
Yeah, that's crazy, man. Because I mean, I told you I only put 0.5% on both of them, so but that still would have been 1% on both. Like, would have been nice.
What's your euro dollar doing? Is that moving? Like, is the pound US dollar
going the other way now? It's going the other way.
Yeah.
See, they played it real sneaky today. They played it real sneaky today. See, this is what I mean, though, right? This feeling that I have right now, yeah, it sucks. That sucks that it just happened because I didn't make nothing off of it. But man, oh man, it feels much better than being down, right? And like, man, I knew I should have did that.
Yeah, for sure. For sure. Yeah, I'm a bit surprised. I mean, there's definitely a move in gold to the upside. We haven't broken that 3398 level yet. The NASDAQ definitely sold off. But this is not a big move for FOMC. But yeah, I know. We're going to have to wait for the speech. We'll see what I'm... It's now like on the NASDAQ is now on the S1 level. Do you mind if I quickly show my chart?
Yeah.
You do mind. Okay, let's have a look quickly. All right, so we're finding support on right on S1 right there. So it's bouncing up. I just quickly wanted to show you. See, there's gold now. It's right at that level, 338, on that ascending triangle. So that's gold. But the pound US dollar is, I mean, really? That's it. It's like
that's
there's nothing. Yeah, it's like it doesn't even look like, it just looks like a normal 15-minute candle, with big upper wick and lower wick. It's just like nothing. And the other one, Bitcoin, is retracing. Those are the three markers that I'm looking at. And the NASDAQ is now, definitely rejecting that 200 EMA again. Yeah, I think it's a bit like, Eamon, if you had to trade this, like like a swing trade the NASDAQ, like would you have taken a position or not?
No, swing. I never took swing, but let's say if I want to take swing, I will do the same what I do in the 1 hour to take, let's say, intraday trades. I will do it on the daily. So maybe I will sell on Monday. I will sell and I'm holding, because if you check the daily on the daily charts of NQ.
Yeah, that's the daily.
Yeah, so we don't have similar charts, but you can see like we had a
supply.
This is
the CFD.
Oh, CFD, yeah. But we have we open up into a supply like on Monday. So if let's say one day I changed my approach, like I will sell from the top of, let's say, I will sell at 20,150 level, and then my stop will be at 20,500. So
would you risk? You would risk about? Would you risk 40%, 50% of your account, or
no? Just, you will risk 100.
You take it. Yeah. What do you mean 100? I'll put some extra money in there.
Yeah. When you see the margin call, and then you add money.
Yeah. No, I've never done that. Like, I mean, margin calls is like for the days when you make like $200 deposits.
You never got margin call?
Margin calls, I mean, not like the alert or an email margin call. Yeah, loads. Like my inbox was like spammed with those emails. Lots. Damn, like, have you never had like a margin call? Of course I have. Like, I mean, especially when you start.
I thought you are special.
No. Oh my God, it took me much longer than most people. Much longer, and I kind of struggled with everything, because like when I started in 2004, we didn't have the same kind of information available today. In fact, I was probably one of the first, definitely not the first, but one of the first people to ever post a YouTube video 17 years ago.
Wow.
On Fibonacci levels, yeah. But I never continued. I was just like, it was a bit of fun. Actually,
And you
mentioned
were
this in
trading
another
on
thing.
your laptop or journal or something?
No, it's like laptop, always laptop. But there was it was
Internet,
spread
everything.
betting. Yeah. No, I had to, you know,
To call.
like I had a VHS cassette and I sent it to BBC and said to them, "Can you please put it onto YouTube?" No, of course, man. What are you talking about? 2004, like we had broadband then. What are you talking about? Yeah, but anyway, yeah, but like that was like, but yeah, I tried to make money, never did for a long time. It was just turned out to be the most expensive thing ever. But yeah, you see, Robert also says, yeah, I also just can't leave it in too much. Too much because of the trading drawdown. So if I can draw down 2K, if it goes in 2K profit and then break even, I know I can only lose 1K from that point. You see, you're focusing on the outcome. You're thinking just about money. Your focus is on the wrong spot, my friend. You need to focus on process. What you need to say, yeah, you need to talk about, yeah, the support level kind of didn't hold, so I wasn't sure. Like, so I got in. Yeah, that's the not money side of things. Your focus is not in the right place, my friend.
100%. And it's hard to always to keep going back to this, but at the end of the day, that's what it's all about, right? Like you'll notice, Eamon, Yanni, and I every single day when we get on here and we go through what we're looking at, it's the same. We're not changing anything at all. It could almost be looked at as boring. We're saying the same stuff. It's a whole process, right? Because the market is so dynamic. It's chaos everywhere, and you're trying to create organization in the process within this dynamic market, and that's the only way you can do it with a set of rules. That's the only way you can do it.
Good trading is boring. You're right. Good trading is boring.
Yeah,
and
it comes down to the smallest stuff, right? Like, you know how bad it took it. Like I wanted to just, even after the NQ just drops off like that and goes to the profit, how I thought to hold off, to not grab that. It takes monk-like discipline, right? Like you could have easily just jumped in and like, oh, I know it's doing it now. It's doing it now. Just get in. No. Don't do that. Because if it go back and you lose, you're gonna be like, man, I knew I shouldn't have did that. Just wait for the next setup. Take all of that energy out on EU when it sets up. That's what I'm about to do. I'm about to take it out on EU.
yeah. Oh man, I'll tell you what. But Robert, in all fairness, you are not the only one. I mean, most people go through that, my friend. Most. I would probably say everybody. Like all. There's no trader. Like it's
no
even if
exception.
even if you work at a prop desk, you know, like a proper prop desk. You know, they say it takes 3 years of training. 3 years of training, and you are surrounded by professional traders all day. Professional traders who are very successful, probably arguably some of the best traders in the industry. You are surrounded by those guys every day. It still takes 3 years. So if you are not surrounded by those people, and you are just like, you're gonna have to do this course and that course and YouTube videos, my friend, it's gonna take some time, right? It's just unfortunately one of those things. It's a skill that's gonna take time. It just takes time.
Yeah.
But you need to focus more on the skill, not the money. You should not even think about making money right now. No, the focus on the skill.
Question for both of y'all. How long did it take y'all to like finally become profitable? Like how long did it take?
For me, oh my God, close to 10 years.
4 years, 4 years and a half.
10
But
years for
losing,
me.
not losing,
Yeah.
losing, and still like sometimes you have bad months. Still, it's. But
No, but
for me, like,
I'll tell
for
you
me,
exactly. Sorry, carry on, Eamon.
No, please go.
No,
Coach
but
Ian,
I'll just quickly, like the journey was like, man, I mean, just like, and I think most people watching can relate to this. Maybe you guys as well. It's like there's so many different. I mean, I've said this before. It's like it's a whole kind of yellow page book of strategies and indicators and ideas and
combinations and time frames, like which time frame should you focus on? Is it the 5 minute, the 1 minute, the 1 hour? Like where do you go? Where do you start? What should you just look at a trend? It's just all confusing, right?
Yeah.
And then finally you get to a point where you want to say, okay, I'm going to just do this. And then you do that and you do it for 6 months. And you look at your results and you're like, okay, I'm not getting the result. And then, okay, I've done everything I was supposed to be doing. Maybe I need to do this one tweak, or you change a few things around because obviously what you're doing is not working. And then you try that for another 6 months and then that's not working. And then you go, okay, maybe this whole thing is just rubbish. Maybe I need to look at maybe a different time frame or include multiple time frames. And then you test that before you know it, 5 years is gone.
Yep.
Yeah,
That's
right.
true.
Yeah, it's true.
True.
And yeah. So, and then I spend a lot of time on developing this EA. That was an absolute waste of time because I thought, like, if you're supposed to articulate, or if you can articulate your strategy to the T, you can explain it like these are the rules, and people say stick to your rules. If that's the case, why can't you automate it, right? So that was the reasoning back then. I spent an enormous amount of time and money on that thing. I got pretty far, and it was working very well for probably about 6 or 7 months, really, really well. And then it just kind of didn't want to work anymore. I'm like, oh no. So then, but the main issue with that is that discretionary element, like the structures, and that's exceptional. That's so difficult to program. Like, how do you to the structures and so on. So yeah, it was a very, very long and uncomfortable, unpleasant. It was not fun. I mean, at the beginning, obviously, a lot of passion, loved it, wanted to do it, and but after year 4 of just struggling, you kind of like it becomes more difficult. But if you don't really have a true passion for it, you probably give up, right?
Yeah,
you won't keep going. So you're gonna have to keep going. And there were many times when I wanted to when I thought this is not for me. I've like spent all this bloody time and money and I'm getting nothing for it. I'm putting in all this effort and for nothing. In fact, it's costing me money.
It's an expensive hobby at this point.
Yeah, I'm like, I might as well go play golf or something since I'm paying for this. So now I've been through that as well. So Robert, don't feel like you're alone. I think most people go through that, and it does take time.
Yeah,
I think the good thing with Robert is
10 years. You said 4.5. Amen. It took me 7 years. That's a long time. 7 years of going through the majority of what you just said. Like trying and failing, switching and failing, trying this and failing, going to this mentor, failing, going to this course and failing. Finally coming up with your own set of stuff and like, all right, tweaking and trading and tweaking and back testing and this and that. Next thing you know, like you said, 5 years went by. Crazy. 5 years went by. Next thing you know, you're losing less money and less money and less money. Then you start breaking even. You don't do the same stupid stuff you used to do. Then you start making a little bit of money, a little bit more money, and then boom, next thing you know, 7 years goes by, you're finally a profitable trader. Right?
Yeah.
So another 7 years. 10 years total. So 10 years total. 7 years failing. The last 3 years are just now like, all right, consistently full time. So it's a long time to put into something, right? Like,
yeah, but I mean, you guys watching, and Robert, you're very fortunate. You have access to coaches on YouTube for free, which is not something any of us had. And you can ask questions, and we explain to you exactly what we look at and look for and wait for. It's like it's not something we had. So you can really just kind of take in and learn a lot here. And you need to forget. I mean, for me, like once I just like, okay, you know what? I'm probably never going to make money here. So let me just forget about that and just look at the charts and so on. And guess what? Now I'm focusing on the job and not the money. You got to stop thinking about making money because your focus is just on the right spot. And if you one of us,
in your opinion, Coach Yani, like what is the solution for, let's say, for Robert, how to not think about money? So if we will go in details a little bit. So what's our, let's say,
what's the
some
solution?
mechanism?
Well, no, we went through this several times now. But what I did say to him is like he needs to trade so small that a profitable trade, it's not possible to get excited about the profit, right? Because it's so small. And the same with the loss. The loss is so small, it's impossible to get excited about the result. Right. So you need to trade smaller. Just trade smaller and focus on the process. If you're not clear on the process, well, again, you've got access to, I mean, this is a 5-hour live stream, 8, 9 coaches or whatever, every single day, Monday to Friday. And you can ask them any questions. I mean, come on, it's free. Why would you not? So, yeah.
And keep that job you got for now, right? That money that you're focusing on, keep that job, right? Because that's what's going to not have you stressed out about trying to make money during trading, right? Like that's going to be the biggest thing. And it can give you that ease that you don't have to worry about paying the bills from trading. Because again, you got to focus on the process first. Like all this other stuff comes after. It's a byproduct of mastering the process, right? Like one thing, and I'm sure y'all do the same thing. I pride myself on following my system, right? Because I've been to the point where when I don't follow it, I know what I get. I get my money taken. That's just how it goes. Like I know that lesson already. I've learned that, and I'd rather not trade than break a rule and get my money taken. I'd rather just sit there and watch. Seriously, I would much rather do that because it don't hurt. It don't hurt like it does when you knew you shouldn't have did something and you lose. That hurts.
Yeah, that is. But you know, like it is. Robert, I understand, man. It's difficult when you still do it. You're not supposed to be doing it, but it's all linked. You can all like if you really like. When I used to do like a lot of coaching and so on, I don't do that anymore. But when I used to, like when you like really, I always tell people to reverse engineer. What you know from the moment where you kind of lost control and just kind of think back what happened before that, and then what happened before, because you're trying to find the trigger. What triggered you to do all of that stuff? And most of the time it comes down to they you know, even FOMO and all of that kind of stuff. You focused on the money.
Yeah.
You think like, why are you upset about a trade you've missed? Because you think about all the money you could have made, right? So, and that is difficult to do.
For me, like just I want to highlight just one small thing, and also you should know as a person your capacity, like how long you can focus, because I assume like in the beginning, Robert, like you are full focus, you have your plan, but the moment, let's say after 30 minutes watching the chart, it depends on the person. After 30 minutes watching the chart or after 45 minutes watching the chart, your level of focus go lower, and you start, let's say, taking some bad decisions. So I'm not sure yet in your case, but also it's important to know like how long can you, let's say, stay focused, let's say at least 95%. So I don't know, Michael, what you think about that.
Yeah, because at the end of the day, and I mean, again, some people can't work from home, right? Because they get sidetracked. They end up getting on social media and, you know, whatever it is. Even before I started trading, I had my own company. So I could work from home very well. I follow my process in the morning. I know what I need to be doing as though, you know, I'm my own boss, basically. So just knowing, hey, I can wake up at a certain time and I'm good to go. But around 2, 3, 4 o'clock, I start getting lazy. You should know that. Like you should definitely know that about yourself, so you don't start making these bad decisions, right? And the same thing with trading. Trading is gonna pack all that into a small amount of time, right? So if you can only focus for 30, 45, an hour, hour and a half, 2 hours, that's all you should be doing. Because around 2 hours, 2.5 hours, now he come to, we call it the monkey brain, right? The monkey brains want to get on and click, start doing crazy stuff. Don't be that person.
I like that.
Yeah, you just clicking stuff. Like, what are you doing? And then once the trade is over and you see you down for the day, then you turn back into yourself. You like, what did I just do?
Is it me?
You gotta You got to stop that altogether. It's you, the human being, Robert, and then there's the monkey brain who comes in, who does not care about nothing. He just wants to click buttons and he's not thinking clearly. You got to know that happens, right? And catch yourself before that happens. Because I'm telling you, the main reason that will happen is when you jump into a trade with no plan. You got to have all that thought out before you get in. Otherwise, there go the monkey coming on right there. That's how it goes.
Yeah, absolutely. All right, guys, but that is time that we sadly came to the end of our session.
Yeah.
Michael, Eamon, always great to see you guys. Well, let's
always.
see if if the speech does anything, because the pound US dollar is doing like nothing. Hopefully, it will say something.
It just said like, "Good morning, everyone." So good afternoon, everyone. So
we'll
oh wow,
maybe
sounds very important. All right, guys. Robert, everybody else for watching. Thanks for watching. Have a great evening. Trade safe.
Right,
Tomorrow, if you
easy,
trade the pound US dollar, watch out. There's another news event tomorrow. Good evening. Have a good one.
Right.
Cheers, guys.
Thank you,
Cheers.
Michael.
Bye.
Thank you.
Bye.
Ian.